The scammers online spreading their lies, pumping stocks with dollar signs in their eyes. But we see through the noise, cut through the mold, calling out fraudsters. Truth be told, hey, expose the lies, let the story unfold. Truth be told, yeah, shining the light on the tricks they sold. No hype, no spin, we bring the facts, let the truth roll in. Fraudsters beware, your game's getting old. We're taking it back when truth be told. Truth be told. Truth be told. And the truth shall set you free.
Oh, well, there we go. Sometimes that intro, Restream is kind of has trouble with that. Welcome again,
I didn't-
everyone, to yet another
I wasn't
episode
expecting
of
the camera
Truth
for a
Be
little bit.
Told. We've got a whole cast of characters. Amy will be showing up just a titch late, but when she comes in, we'll bump her in. For right now, we got Nick back again for yet another exciting action-packed episode. A lot going on in financial markets, but how things going for you, Nick?
It's good. Yeah. It's so much if you're a nerd, a stock market nerd, an asset prices nerd, there's so much going on. There's nothing to be bored about it.
There's never a boring day, to be sure. Last time we had you on, it was right before you blew up and got super popular and with everybody about your whole open letter to Secretary Bessent. I kind of just wanted to, before we got to the main topic for today, kind of pick up for the people who've been missing kind of what you've been doing since then, because you got enough attention that Bessent had to set up and take attention. But what happened first was that a bunch of them came out, Bessent and then Jerome Powell and then Atkins both said that all three of them said that they basically didn't see systemic risk. And we kind of had a conversation, I think, on X briefly after that, where I kind of, pinged the ball to you where you said, I asked basically, do you think that they're being truthful? Did they give enough information to satisfy you? Or do you see it more like when the Fed said subprime is contained kind of thing? And so I guess I'll ping that question back to you on your feelings about that.
Yeah, no, that's exactly right. I mean, they're looking in the wrong place and they're being pointed to the wrong place because when they talk about this stuff, everyone in the room that they talk to, their paycheck is based on there not being a problem. So yeah, listen, I'm glad that he at least recognized that he needed to publicly bring people in, but it's a disaster.
Yeah. Maybe you could enlighten a little bit on that, because I think the question that had triggered me and Platinum on that was we had shown previously some clips from this one where Steve Eisman was talking with Steve Leisman about it.
Eisman.
Thank you. I was really dreading having to say that one. Where basically, Eisman. Fuck. Now I'm all tangled up because I'm trying to figure out both of them. They're both Steve. Stop it. But basically, Eisman was basically saying that, banking's since the great financial crisis, they're less levered up and there's less likely for systemic risks. Whereas Eisman was basically saying that, well, we've got a bunch of shadow banking going on here. We're not sure where the systemic risks might be. And even if there isn't any systemic risks, because it's like you said, it's all in the shadows. If these people would just show their books, we'd know it's fine. But since they don't, we have no way to tell. So he's saying that there could be like systemic financial risk, because if I don't know what's going to happen to my portfolio, I'm just going to, put my money under the mattress just to be safe. If I do know where the risk is and I can allocate based on that, then I'll make smart decisions. But if I have no idea where the smart decision is, then I'm just going to pull the rug.
Yeah, I mean, they're just looking in the wrong place. So if you look at the banking balance sheets, it's fine.
Mm-hmm.
You're right about that. It's not systemic from the banking system or as a primary source of collateral like it was in 2008. But a lot of their reasoning is pretty dumb, right? Like they're saying it's smaller than 2008, and they're doing, the full amount of MBS, or even you could do agency MBS and say it's bigger, versus the subprime was only $1.2 trillion. Now, the reason why that was so systemic was because that was being used as collateral
for other things. Yeah.
For other things. And now it's typically treasuries, right? You have the massive repo system that's exploded. But my point is that it doesn't have to be inside the collateral system to be systemic. And the insurance balance sheet is as big on a liability basis as all of the US banking system.
Right. And that was some of the things that came up, like while the Treasury was saying that it wasn't systemic, they were also starting to talk to insurance regulators. And even though they don't have direct control, they were starting to look at some of this stuff with state regulators that do have more direct control and be like, what's the pain point here? Because there's a lot of bleed, like you said, and like what we have noticed, where some of these private credit, private equity funds are trying to get into people's retirements, trying to get into these pension funds. And because that's where all the liquid capital is now. And is that sort of like one of the areas that you're worried about that people aren't looking at as far as how this rolling snowball is moving downhill?
Certainly. So banks are really important because when they have stress, they stop lending and the economy slows. That's not the concern that I have. So credit events, if there are credit events in the size that we're talking about, I mean, the annuity in life, there's annuity life, there's property and casualty, and then there's healthcare. The annuity life balance sheet's the biggest because they have, duration of 7 to 10 years average. And then they match it up with assets. They match up those liabilities with assets. And that is because of the duration there, property and casualty, you need to keep money in reserve for a hurricane or something like that in case in any 1 month there's a big event and you have to pay out. Healthcare is mostly like in and out, unless there's a COVID pandemic, healthcare companies are never going to take a loss in a month. So the annuity and life side is where all of these assets with duration have been set. One of which, private credit, private debt, but there's also mortgages, there's also treasuries, there's also long duration corporates. So my point is that, something that happens where that whole balance sheet is stressed, and it's not to happen, where New York life is stressed, right? There is a huge skew of who are the better insurance players with the safer balance sheets and who are the worst. But it's helpful to think about it because of the scale and size at $10 trillion. That is 150% bigger than the Federal Reserve's balance sheet. So if 70 players out of the 680 are functionally insolvent, and even 2 or 3 big ones go out, you're dealing with a scenario where it might be started by private credit, but then you have to recognize the mortgages that are underwater. Then you have to recognize the corporates that are underwater. Then you have to recognize the treasuries that are underwater, all of which the Fed can't just assume. It's technically the state's responsibility. And you said something that was funny. You were like, they have more direct oversight, the state commissioners, right? But they still can't see what's in Bermuda. So
that's another big problem with some of this offshore stuff. Yeah,
the offshore,
and that's
stuff,
what they mean. When I was talking about earlier, when I talk about shadow banking, it's stuff that is finance related, but it's not necessarily on a bank's balance sheet where it's like has that direct correlation. Where if like Bank of America says we're levered up X amount, like this stuff is not being considered in that.
Right. People they have a hard time considering thinking about crises that aren't exactly like the last one. Right. But my argument truly is that this would be harder to fix because if you have a collateral problem, that's what the Fed's tools do. They solve the collateral problem. If you have a credit widespread problem, what are we going to do? Set up a repo facility for 500 billion, $1 trillion and just pretend like it's not a bailout. I don't even think that
literally, yes. Probably.
Right. Right.
Yeah, probably. But the thing is that I think that would, like you see people trust the gold bugs, you see the Bitcoiners, you see everyone talk about like the system and the lack of trust in the system. I feel like if you set up $1 trillion facility just to bail out private equity backed insurers, I think that fundamentally too much trust would be lost in the system and the dollar. And again, I think it's going to have to be a bailout on the order of COVID, right? So if you're doing that, COVID, the Fed could jawbone everything so that they pumped money into collateral. They even bought corporates. They bought mortgages. They just were like throwing money at everything. But it worked because it was a one-off event and people were like, ooh, like, the Fed's going to do whatever it takes. And by the way, this is just a really weird thing. If it happens without a pandemic, without like something I just think that too much trust would be lost in the system where the jawbone might not be effective. And that's where you could see, a worse scenario than 2000, or at least as bad in terms of the contagion effect.
Mm-hmm.
I mean, you might have occupied, but the thing is, like, I mean, they even did the bank loan program. Remember when the banks? It was like 2022, right?
Yeah.
And nobody cared about that shit.
Right. It was a panic for a few weeks, and then it was fine. Bank of America bought $600 billion of 20-year bonds under 2%, and they were, if they had to market, their equity was wide.
Right.
But the government was like, we kind of made you guys do that. It's our bad. It's our bad.
Right.
So we're going to set up this facility so you can loan against it to help your asset liability mismatch. The numbers would be so much bigger for this.
Yeah.
And you always have to do 2 times more than they need. So it's like the TARP program was $750 or so billion, but they only drew 440. So then if you're talking about like, what if we need 1.5 trillion, like the difference between 250 billion, we're just numb to these numbers.
Yeah. We're super, like, wasn't during COVID, it was like 5 trillion that they added to the balance sheet.
Yes. So that's
right. So it's like, what's 1 trillion?
Yeah. That's the balance sheet side, but I don't think you can set up a repo facility for 1.5 trillion and have people.
Not with that attitude.
On that point, you had also, I think, mentioned that there was some maybe mispricing of these books. And now from some of what you said, it seems like the SEC that's been kind of sleepy-eyed at the wheel with a lot of things this administration is starting to look.
Is this the first thing they've investigated this year?
Yeah. Wait, no, this is really funny. Please search up Atkins Wikipedia.
Why?
See what his last job was. These guys, they're just doing hand waving. It's like, we should do something just to like say that we did something.
Paul Atkins.
Well, this is the first something he's done this year, I think.
True.
It's just allegedly investigating.
Yeah, zero enforcement. He's been on a couple conference circuits. Guys.
Yeah, in 2009.
He's pretty much trying to take away the 10 Qs right now. Like, that's what he's doing.
That's really dumb. I do not like that at all.
No, right before. He was SEC, and then he went. Where is it?
So and then he he founded a firm.
Did they strike it? No way.
And then went to Fidelity, Goldman Sachs, U.S. Chamber of Commerce, joined President's Business, part of the Token Alliance as a cryptocurrency and then Board of Securities Incorporated, a cryptocurrency firm.
Yeah, I mean, these guys all cash out after they go. But he was at Cliffwater. Cliffwater is at a private equity. Hello.
Made it. Just woo.
Yeah, Cliffwater.
Sliding in there.
Cliffwater is a private credit firm that I've been going after, and so they're one of the more ridiculous things that I've looked at. But so coming from him, oh, we're going to look at it. It's like,
yeah, we're investigating ourselves, and we found no wrongdoing.
yeah,
Perfect.
Speaking of that sort of thing,
Did I miss Groupon?
no,
Not yet.
we've been
got here
kindly
just in
catching up as to what Nick has been doing while we were.
You don't follow
in
Nick
between the last
Smith
time
on
we
all of
talked
his
with me
socials
now.
and watch all of his YouTube videos?
I got to get better at
Or
YouTube.
listen to his
What
space.
kind of,
They're
what
actually
kind
really
of
good to
fans
listen
are
to.
these?
Yeah,
I'm subscribed.
yeah. You turn notifications.
You guys are slacking.
But
But it's
another
like-
thing that I kind of wanted to talk about that was kind of interesting was because I've been sort of following how Martin Shkreli has been kind of calling out the room on some of these quantum computing companies. And before I throw a question at you, I kind of want to just play this one clip from your channel.
Annual report, Illumina says they have 9,000 square feet. But as you can see, everywhere over there and on the back side is actually Toyon. See, this is a defense tech company. I'm fairly certain they have subleased all of this space out. As you can see right there, this whole side of the business, the whole side of the industrial property is Toyon, as well as the back, the employees have told me. This is the headquarters.
So what was your entire investigation?
Your
You
boots on
camped
the
out in front of
ground,
their
okay.
headquarters for several days, right?
Yeah, I'm like, what is this company? And it's like 15 minutes away from me because it's a really popular retail stock in microcap land.
Mhm.
Like
All of them
guys
are.
do it.
It's crazy. All of them are. There's like 4 of them, right?
Yeah, the promotion, the stock promoters, all of the bucket shops, all related to this. It's really, really bad. You have to know how to look through it. But right in that video, if you actually look in, what you can see, there's a clean room in the back. There's nothing in the clean room. There's one point. I say that there's, some testing machines, whatever, but there's 1.2 million of PP&E on the balance sheet. So all of the work does not happen there. And I was camping outside for 5 days in a row, like 9 a.m., 9:30, like trying to see people come into the office. I went early because I consider, they're hard workers, right? Like they're going to get into the office early. So I was like there from like 8:30 to 9:45. I went in the middle of the night. I went, during close, lunch, whatever, like different times trying to find people going in and out of the business. And that Toyon business, it was, I was like, I kept on going up to people and they're like, oh no, I work at Toyon. And I'm like, okay, so you guys share the building. Have you ever seen like Illumina employees? Have you ever seen them do work? Like, do you know who they are? And they say that we've seen like 4 total employees go in and out of there.
Right.
And meanwhile, that's a state-of-the-art, supposedly, research and development facility. So
What's the ticker for this?
ALMU.
Okay.
And it's a hot sector. Like, the reason why people were kept on pitching it to me on TikTok and Twitter and whatever is because I've been following photonics for 6 years, and in various, from the industrial side to the data center applications. So being a semiconductor materials stock, and it's just popular and it's stock promoted and whatever, and it has a lot of buzzwords and pretty much every press release.
Oh wow. And
I
it's
remember
up,
like
37% year to date.
yeah.
Yeah, well, listen, they're about to issue $50 million of shares, I guarantee you.
Of course they are.
Like,
Yeah.
Of course they are.
they just pump it, and
This is like another stock on the show.
yeah. I mean, so every single part about that story doesn't make any sense. Even one of the reactors that they're
Never
saying
do.
they what?
I said they never do. Makes sense.
No. The functional the technology itself has been tried for 25 years. This guy is a PhD professor at UCSB. So he has access to $70 to $80 million of equipment, property of the state of California. But the claims are outrageous, right? They say they're going to 10 different end markets. They've never proven how in gas on silicon which is indium, gallium, arsenide. And arsenide's the key one because it's rat poison, right? Like
Mhm.
you can't make something else that's on silicon remotely. It needs to be hermetically sealed. Otherwise, it's going to corrupt through the gases, everything else. So it's going to take a lot of money to even remotely have a chance to work. And like, the biggest issue is when you're doing compounds like that is the atoms need to line up. So they've never said like how they got different atoms. It's called a lattice mismatch to like line up. So like I just dove deeper and deeper into this thing because
Wasn't there one picture that you had posted on X where they were trying to pass off a silicone, a wafer from like that they had borrowed from one of the schools or something as one of their own wafers or something like that? I think it was.
So nearly all of the pictures on their website or that they come out with press releases are provably stock. And some of them, it's like a blank wafer. It doesn't
Right.
have
It doesn't have any traces, doesn't have anything on it. It's just a wafer.
No, and people don't know any better. Now,
Right.
there is an academic paper that they came out with before they got all this money. And the thing is that it's more of like an engineering feat than a technology feat. And in fact, 4 years prior, I think, Brooke, it's a B. There's another UCSB professor at the photonics lab in UCSB that actually made a breakthrough and showed, showed something academically that was peer reviewed and very impressive about that epitaxy. So that whole department has been working on various different compounds. And then what Clampkin did, the CEO, is he made a tweak that could then make it more commercializable, he said. So then he's been going around and saying that he's going to, get this to scale, like this is scalable, this is commercializable. Anyone that has ever dealt with early stage semiconductors, photonics, hardware, anything in, tech land knows how hard it is to scale things. But his investors don't know anything, right? If he's
like scaling just the semiconductors themselves, like the wafers is so hard that I've heard of so many of the complications that not just Intel has had there in Arizona, but even Taiwan Semiconductor has had trying to scale beyond the factory that they have in Taiwan. So this is like a heavily intensive specified business. You got to have really talented staff, and to just pretend like this is something that, like, when you explained these to me, it sounded like Metamaterials, a kid's science project being run as a public company.
Speaking of which,
and they dilute like they're the same thing too.
Do you see Phil's question here? Can you throw that on the screen?
Sure.
Too? That's a really good question.
Chat here.
How's this NASA contract?
No, but that's a really good point. So notice in that press release, it doesn't have a number. And then in the prior one, the DARPA one, it doesn't say how many years. So if you're a serious company, right, you want to give the information that people need to understand where the revenue is going to be and go.
Phil's shorting it right now.
NASA was already a customer, a very small contract. Then they announced that NASA's a customer. Anyway. What?
She said Phil's shorting it right now. I said he will be Monday if he's not.
Right. So
it's not year to date though.
So then they announced that NASA's a customer. It's like NASA was already a customer. What's the marginal difference, right? And if you look through that press release, like super buzzwordy, commercializable, quantum, whatever. It's like
AI,
AR, VR. It's like
it mines Bitcoins while it's at it too.
All the words.
Yeah. And the one prior, so both of the contracts that they just announced were ready customers, and you don't even know if it's enough to cover what is rolling off of the contracts. You don't know how much it is, right? So I called up the IR and get this. I called up the IR. I'm thinking I'm talking to the company, and he goes, "Which company are you calling about?"
Yeah.
And I go, I thought this was.
What do you work for?
So it's
It probably works for a bunch of different companies. I'm
yeah,
assuming,
a
right?
contracted. And then I asked him about his relationship to the analysts because Benchmark and Craig Hallam both cover this company, and they were the only two. They're the only. They also are both in each of the secondaries. No, Craig Hallam was in two of them. Benchmark came on the second one and started covering it. So it's like these bucket shop investment banks are paying.
Open their bags.
Yeah. Are paying the investor relations, are also getting the commission. It's just this,
It's a virtuous circle, as they call it, I believe.
It's a virtuous circle. It's a virtuous circle jerk for sure.
Yeah. Well, now that we've gotten everyone caught up, I just want to open with a small anecdote, because when we were talking about Groupon in the group chat, Oilmutt was like, Groupon? I didn't even realize that company still existed. And so maybe some of our viewers are in the same way. So maybe explain where the company is right now, what it does and everything. And then we can start kind of talking about what you see the company doing and some of the things that you've been actively doing.
It's like the most common comments when I'm talking about it. Wait, I didn't even know that was still a thing. And it almost wasn't. 2 years ago, it was a going concern, which we know one of our friends also has a business on a going concern.
That's pretty much most of the stocks we talk about, sadly.
Yeah. So for the uninitiated, that means like you have a high chance of bankruptcy. And
within the next 12 months.
Yeah, within the next, like, in immediacy. And people saw that with like what is it? Bed Bath and Beyond, and they were like, it's fine.
Trauma. Yeah.
It's just boilerplate. They just put it in there because it's fun.
Yeah.
Right. So
Well, they think that when one of the going concerns is that the stock is volatile and might short squeeze, means that's the company telling them it's going to short squeeze. Not them telling them that you're going to buy at artificially inflated prices and get blown the fuck out.
Yeah, or they're going to issue shares on you to pay debtors.
Right.
I mean, creditors.
No, they think that means that's
It's
some
accretive
secret
dilution.
language.
It's
secret
good
language.
dilution.
And like the company's telling us it's going to squeeze. It's guaranteed winner.
Yeah, no. The private equity company bought the whole thing, and that's good. It's like, no, they're going to liquidate assets. But so then it got taken over by this team. It is a private equity company. It's called Palefire, and they specialize in technology turnarounds. They bought Angie's List. They've stacked up a few wins. They actually came in and they became the CEO and CFO. So they took it from bankruptcy. Dusan Senkpol, the CEO, he was like a temporary CEO, and all of a sudden he's like, I guess I gotta just completely do this all myself.
Yeah.
And he's really well regarded in Czechoslovakia. Like he's a billionaire from nothing, and just was like, all right, I'm gonna come in here like Ryan Cohen and make this way, way, way better. So what he saw the opportunity set was like they had a bunch of really loyal customers because people like deals. Now, the problem was that they had I still think that they have a bloated headcount at 1,700. They had over 6,000. At one point, they had 8,000.
Oh, wow.
For a platform company, right? Like it's a website. So he had to cut that down, and there were a bunch of issues because it was legacy tech, like super legacy tech. And there's been a lot of pains, and the website went offline, and he switched it from -145 million negative free cash flow to -120 to +40 to +45, and that's where we are today. So he did like all of the hard work, and I come in, and I've heard this story pitched like a year ago was hot because it was the first time that they were free cash flow positive, and then their website got kicked offline, and they re-platformed, and a bunch of old ladies got logged off, and they didn't know how to check their email. So like there's some issues. But at this point in time, like it it's a gimme. And for it's like I short stocks, I short Illuma. The people still shorting this thing. Like I'm just like, what are you doing?
That's the big thing, that because before I heard about it from you and saw your posts about it, a lot of the things that were trickling in, like from Tony, I know most of our viewers know Tony DeNiro, and a couple other people, is mostly, the price action, the buybacks, and the high short interest, because this thing is, a volatility engine basically because of a lot of that. And I don't usually focus on those things. I'm more of a fundamentals kind of person, which is why I kind of wanted to have you on, because you were starting to kind of explain things that, like, maybe I'm not ready to make the jump yet, but at least it's got me interested, because there's not just this side of it. There's an actual story, and not just a narrative around it. There's actual changes that are leading to the company growing and expanding and, righting the ship. So why don't you kind of walk us through the plan that you had presented? Speaking of which, actually, I saw this. Have you had open conversations with the board, or have they gotten back to you yet? Or
no, not yet. The call was Friday, so Monday I'll send emails and reach out. It was a quiet period. Originally, I come up.
Oh, right, because of earnings. Yeah.
So originally, like, I'm looking for more of a trade, because the Avis thing is just going bonkers, and I'm like, let me just look through like short interest stocks, and I found it because it was free cash flow positive. Like, I don't want to buy something with just like air under it, nor suggest that anyone look at it, because people just get hurt. But I saw it and I was like, fundamentals are not that bad on this. Like, I've been pitched Groupon a few times over the past decade or whatever, and I'm looking at it, I'm like, it's probably the season. But then I start to look into it more and more, and I realize, like, if anyone goes on the website, I wonder if you can do that. Can you go Groupon.com?
Yeah, let me pull it up here really quick. And then switch it over to this tab. Boom.
So I'm looking at the fundamentals. I'm like, wow, fundamentals are good. Wow, there's a buyback. Wow, like the Owen Wilson. Wow. And then I'm looking at the website and I'm like, this is like not that pretty looking, huh? And what are you getting? What are you getting recommended? You're not logged. You're not logged in. But if I log
I don't have an account. Whoa, how about we scroll past that? Well, I mean, everyone knows where I live at this point, so that's not a big thing. Costco, Mother's Day stuff, Microsoft Office.
Wait, what'd you just scroll by?
His location.
Oh, damn. Well, even with the location, you could quit off of this. I think everyone gets the point that it's not that pretty. The recommendations are not that good. And like, I'm getting like suggested lip filler. Like, what? So when you look at the fundamentals of this company, they're guiding to $70 to $75 million of EBITDA for this year. The market cap now is $700 million. But then you look at a stake that's on their balance sheet at 70 million. It's really worth more like 200 million in SumUp. So it's like,
could you explain that a little bit, because I hadn't heard of that before? What's this sort of the SumUp business?
Apparently Goldman Sachs doesn't know this exists either. So don't
Well, that sounds a little bit more embarrassing than just some retail trader not knowing what it is. So
the biggest name that covers the stock with a $10 rating on it apparently doesn't know that they have a $200 million stake in SumUp, which is going to be one of the hottest European IPOs this year. It's looking like in Q3. So they invested at extremely low, and it's
Groupon invested in it.
Groupon, yeah.
Okay, and what is it? Is it like
it's a fintech platform similar to like Revolut.
Okay.
So it's going to be.
I'm glad you know what that is, Amy. I'm just so out of it on this.
So is it like a broker?
I just it's a fintech platform, has good growth, and
or like a payment processor or something.
It's a premium. All I need to know is the value, quite frankly.
Right.
Sum Up. I know Revolut better.
Card renders POS. Oh, it's a POS system. Okay.
What is sales? Okay.
That's what I said.
It's
Like,
like
is it
Square,
it's a
sort
payment?
of?
It sounds like it would be a
Yes.
payment
Yeah, like
processor.
Square.
Yeah, it looks
Yeah,
like
that's-
Square, like these readers and stuff.
That's what I said.
Okay, that's interesting. That's an interesting angle.
Mhm.
It makes
Yeah,
sense for
I
their
mean-
business. Like it's kind of parallel.
It's non-core, so they're going to monetize it. They've said that they're going to monetize it. It was a good return for them, and there's such a lack of equities in Europe that it, like, if anything IPOs that's any good, like, it's going to be supported. So that's $200 million right there. So really, they have debt, but they also have a bunch of cash. So you can consider the enterprise value right now 530, 550 million, whatever. They're having $75 million of EBITDA is guided, right? So if you look on that basis, 7 times EBITDA for the next year. But then when you look through the business more, and I built a light model, I was talking to other people, calling up holders and asking, what their models look like. People are a little protective, but I got good color on it. And this is like, and anyone can see this is a 90% gross margin business. So there should be more profitability than, a 15% EBITDA margin, 10%. It's been getting better. That's great. But there's a lot of levers to pull, right? And even if you're just looking at 7 times forward, next 12 or 2026 EBITDA, that's what it's trading at now, backing out the stake. There's a buyback running at 7% over the past month and a half. So the share count's going to go lower. And yeah, there's a reason to be very constructive about the stock right now. I think it's, if you just used their numbers, it would be worth 25 to 30. But management sandbags, I think they're going to have more like $100 million of EBITDA this year. And the share count's going to be reduced by a lot. And
it's
also
already pretty small. It's like what, 23 million?
Well, that's the float. Yeah. There's 37 million shares, 23 million, because management Pale Fire owns 25%. Doosan, I think, has another 9% on top of it. CFO, other insiders have another 5%. Then there's a 7% insurance player. Then there's passive. So like the functional float is like extremely tiny. And you reduce that, this is kicking into EPS, positive because of a lot of impairments. There was like $90 million of impairments still in the last year. So, you want to probably look at the EBITDA. It's better to just.
Yeah, because I noticed that when I was looking at the income statement, it was pretty chunky. There was a lot of special one-time deductions and things like that kind of mess around with the looking at the income statement side of it.
Yeah, that's right. Free cash flow or EBITDA, whichever one you want to look at. There's a lot of write-downs on this business, and there will still be. That's why the forward.
Well, we don't have the newest quarter up, so this is kind of not nearly as useful as I thought it would be. But that was just looking at the fidelity, like rolling past 5, basically the trailing 12-month quarter by quarter.
Yeah. Eventually, the PE ratios are going to converge. Not exactly, but it should be. There's not a lot of depreciation. There's not a lot of amortization unless they make some technology.
Right, because it's a tech-like business, and so you don't have a lot of that.
So you can expect it to converge there over, just as the stuff rolls off. But, going back to the website, and I'll talk about the marketing strategy in a second.
Because we got a comment about the website. Like you were talking about the recommendations I was getting, and like we got Vinegar here saying that mostly it's, at least what he saw. And I don't know if I saw that exactly, but it definitely seemed more, and of course, a lot of shoppers are going to be female, but it definitely feels like when it doesn't know who you are, it auto defaults that you must be.
It's a service industry. I mean, service, like it gears you towards service, the service industry. Mm-hmm. But like, I think you used to be able to get Groupons for like trips and
tickets.
excursions and all
Mhm.
kinds of stuff, right? I don't know if they still do that. Right? I couldn't even remember the last time I looked at Groupon, but they used to have all of that. Now he's right. It does seem very like service industry type
services
stuff.
and things
Yeah.
like that.
I feel like they're basically like everything is built towards what their main customer is right now, and women are better at finding deals to begin with. Yeah, so like I do think that's
Right.
probably their biggest customer, but they need to revamp that. Like, yeah, first of all, people need to be their marketing strategy is like marketing for Mother's Day, marketing, basically things that are continuously one-offs. You might get somebody who's thinking about Mother's Day. Oh, Groupon. Oh, okay, I'll like see if there's anything.
Yeah, but you're
else.
not looking at the person and looking what they do daily to target them specifically for what they want.
Apparently it's better when you start buying stuff, but there's a huge amount of friction until the recommendation does anything.
I feel like I remember like a long time ago, people would tell me, oh, we went and did this and did that. And, it's like, oh my, how'd you find that? And they're like Groupon, right? Like, because you could find pretty crazy, awesome deals on Groupon.
Yeah. So the first point that I'm asking management to fix is just the look of it. It's got to be more modern, right? This looks global financial crisis. Easy fix, I don't know. Figma.
Or in the categories, maybe like.
Yes.
If you're looking for services, like there's the services. If you're looking for trips or excursions, there's that. So maybe just like to break it up into categories, and that way when you go to the homepage, you can go to directly where what you're looking for, right? You don't have to scroll through all of that or go try to figure out how to get there. Like just have them in categories. And
you don't want it to feel like a magazine where people like it. Just you. So we're following the Ryan Cohen stuff, right, on eBay.
Mhm.
Yeah, it's a big topic. If you want to stick around for our meme stock segment when we get there.
Yeah, sure. But he said something. Why does GameStop or eBay need marketing at all? Like people know it exists. Like for the use case when it comes up. Oh, I need to sell something online. You go to eBay.
Well, I don't know. I mean, I think a lot of people go to Facebook Marketplace.
Marketplace. You're right. Yeah. That's the alternative, but
because it's local, right? You don't have to deal with all of the auction stuff and all of that stuff. So you can put it on Facebook Marketplace. I would never personally do it because I wouldn't want to deal with all those people. Like, is this still available?
Yeah.
Stuff, but that is more convenient for people because then they can be like,
yeah, but you still know what eBay is. They don't need marketing.
It up and I mean, but I don't think any large you shouldn't give up on advertising or marketing. I mean, you have to keep your name out there.
I would say
maybe they don't need to do as much, but I don't think they should stop.
I don't remember an eBay for me. There's two use cases.
Also there's a lot of like hiding it. Like a lot of advertising isn't so much come to eBay where we have all the stuff. Like a traditional TV ad. It's more like how much money do we need to spend to put all of the stuff we're selling at the top of Google search results.
Yeah. I mean, don't they buy like Super Bowl ads and stuff like that, right?
eBay?
I think so.
I don't know why they would advertise for users' products on there.
Yeah.
I think just generally so for Groupon, right? You do need advertising, but I just think it's misaligned and mistuned. The advertising should be Groupon is revamped. It is got better deals than ever. And this is
come to our website to sell stuff.
Yeah. Well,
rather than for the customer.
On the back end, I think that they need to do AI agents to go after businesses and just suggest them deals. So if you think about this, like
I think if you angle it from like what we hear all the time is that, people are spending so much on groceries and they're running out of money by the end of the month. But there's those people still probably want to do excursions or do things or whatever. So if you push that targeted out to businesses, because I guess for the question is, does a business I'm in the service industry and I actually don't do discounts because I don't want somebody who's just going to come to me for a discount, but I'm small business. A bigger place, they can recapture that at a, you know, and maybe even retain. So like, I think the selling point is that, you know, people don't have a whole lot of money, but they still have the desire to do this. So if you join us and you give it at a discount, and then we start selling them on Groupon like that, right? Like market it towards what people are feeling in their everyday life.
Go ahead and handle Amy's, and then right after I'll pitch in Vinegar, who's got something in the comments, it seems like.
Yeah, I would just say the value of this business on one, like it's not the target demographic of people that typically buy stocks or like hedge fund managers or whatever. Right. They're not looking for deals to save, you know, $30. It is for the middle class, for, you know, people that rely on Social Security. And I think it really
I feel like they're getting squeezed right now.
Right.
On everything.
Everyone hurt by inflation is the target demographic for Groupon. Yep. I think young people is severely underemphasized on what their target demographic should be. But if
I was talking more towards targeting businesses, right? Or marketing to businesses.
Yeah, no, if you think about the other side, businesses want access to customers and they're paying on Google $100. So if they are giving away, you know, it's 50% off, you know, some sort of beauty care, or, you know, it's not like if it's lip filler, they're not going to discount it that much, but they can do the math, understanding we're going to get the customer in the door and we're going to get some money, and hopefully they can come back. We'll give them a great experience so that we can keep that customer.
It's retention. Yeah.
If you are a successful small business and you're booked up to you're not going to go on there, but there's a lot of struggling small businesses in the age of megacorps. They're going the enterprise route. It does make sense. But if you go to Domino's, they already have their own app. If you go to McDonald's, like, you know, you're not going to be able to convince, because they want you to be on their app.
Yeah, it's for people who can't afford to produce their own customer interface. They need someone who already has something built that they can just insert into their business.
Yeah. Right.
If there's a way for exposure to come from that as well, because I think a lot of people find, especially small businesses, find exposure to be difficult, right? And we have, like, I personally get calls from Yelp all the time. It's like, do this and set this up and blah, blah, blah. Like all these calls that are like, let us put you on Yelp. But if there's a way for Groupon to drive interest to like a small business in, you know, doing business with them, but like giving exposure to small, because that's the hardest thing as a small business, is to get exposure, right? Like a lot of exposure that I get is basically word of mouth, because my clients walk around with my work all over them. So people are like, oh my God, who does your hair? So I have it sort of built in, but a lot of these don't. And so if there's a way for...
No, it's great if you can rely on and spend nothing on marketing, but
well, and if Groupon can make that part of their, part of the deal is that it gets them some exposure, I think that becomes very interesting for small businesses.
For sure. You should be in the network. It's like being on Yelp, right? Like you should be there. Someone's
without having to deal with Yelp, because they're super fucking annoying.
Right. But you're looking through, I need a hairstylist in, you know, Santa Barbara or wherever. Right. And it's like, well, you know, Sydney's hairstylists, like they're on there, they're offering 30%. Like we should be on there too, you know?
Right.
So, and then it's a clear network effect, right? Yeah. It's very easy to understand the value. It's not for everyone, but 16 million households per year are on it. And I didn't read the whole. I don't remember the whole.
Yeah, I was waiting until you got finished with Amy, and so it was Nick. How do you think that they can reduce customer friction in the coupon redemption process? I think that updating the merchant software to connect coupons automatically for the more seamless, invisible experience would help bring customers back. Just not sure how feasible that is. Maybe it's just me, but I feel like there's an inherent shame built into Groupon's perception.
Yeah, that can change in a second. Everything, there's so many things, friction, feel about it that need to change. And I just want to bring this back to the fundamentals, like the business now that everyone can see the hair on it, right? They're not seeing behind the scenes how much they've worked on the platform, how much they've worked on the data, how much they've, you know, cut costs and all of that. But you can imagine how much, like, it would be an explosion if you solve that problem. right? Then you're driving on the same or less cost. You're increasing revenue 25% year over year, and it's going straight to the bottom line. So you're getting a business at a value price today with the potential to be completely reshaped and, given Anne Hathaway makeover.
Yeah. I really like point 4 in your, and I know we haven't spent a lot of time going through your list, but I think point 4 is important about integrating influencers and that sort of thing, especially after I feel like there is an opportunity really to, bring in the influencer situation because of the fallout that's come from Honey. And if you can, position yourself to being more ethical than that situation was, and maybe get some of these influencers to be promoting your platform, that you can sort of, like you said, start plugging people into the front side of this, this space, and start getting this kind of community or organic community oriented kind of app that Groupon is, and start doing something like that. That would be an interesting way. Like you were talking about, maybe marketing spend isn't so important, but in that area, that might be where, if you were going to spend some money on doing that sort of thing.
Yeah, I mean, I'm fine with marketing spend, right? But I think it should be based on Groupon's cool, just to reset the narrative, right? Go on
Right.
Groupon, use my link. User-generated content is huge. What they're saying is that their paid ad channel, like their paid channel, is working brilliantly. They're looking at the data; it's all good. And I'm like, yeah, duh, you're selling deals. Like it's you're selling discounted everything. Like it should work. Right. But you'll get a better feel of it if you get users, influencers that look cool to say Groupon's cool. Number one.
Right.
Number two, it's got to be that if there's a person talking about Groupon versus some deal on Groupon, then people are going to be sitting on the platform more. Albeit you have to change the friction in the feel and actually make it cool. But what is happening on their user base is that a lot of it is one-off. So you have an average per user of 2.3 Groupons per year, units per year. If you take that, right, that's where we get the 75. I think it's $100 million of EBITDA. 75 is the guide, right? I think it's going to be 100. If you take that from 2.3 times per year to 3.3, that unlocks $100 more million of EBITDA. If it goes to 4.3, it's $200 million more dollars of EBITDA. And again, because this is a 90% gross margin business. So there's so many levers to pull on this that you're buying a value stock, and all of a sudden it could kick into hyper gear. And I tweeted once, I was like, the hydraulic force to lift EPS in this thing is just absolutely insane. So that's exactly what I like to see. Oh, and bonus, short interest, they're going to be buyers higher. I'm not really too concerned about that anymore.
Yeah.
So
I'm also. Oh yeah, go right ahead, Platinum.
Okay, I was just gonna say, I searched my email for a Groupon purchase, and I actually have a ton of purchases from 2016 all the way up to 2020, and they're all Groupon goods orders, just ordering various things for a discount.
They were goods?
Yep, all of them.
Interesting.
Yeah, so I have a ton of different Groupon, your Groupon goods order is shipping. And it's all from 2016, all the way up to 2020. And then COVID hit and just everything changed for everybody, I guess.
Yeah. I don't think it's too far away. Everyone knows Groupon. If they can break through and first of all, we're talking about the supply side of it. They should have AI agents. They've already talked about.
That's what I was getting ready to ask about, what sort of AI integration that you were, because for me, I'm kind of in between. I'm not this AI hater, but I'm definitely not, crazy on. I see how it's used in my personal life and it works, and I also see how it's been, kind of broken. So kind of, I guess, walk me through it. How would you do that sort of implementation, and how would you ensure that it would be consistent and a consistent experience for everyone?
I mean, I would say for me, like, it would automatically show me Groupon goods things because that's something that I've already bought. So, like, don't show me the lip fillers. Show me, like, you know, this, that, and the other thing for a discount that I can just order and buy.
Right.
I mean, that's just the recommendation algorithm. That is like really, like, I don't know why they haven't.
Yeah, why is it bad?
Figured that out yet?
Maybe that's a good question to ask the board if you do get to talk to them. It's like, what sort of data inputs are you getting? What's the dealio on that?
I think they're really smart on understanding marginal profit data in that way, but I think it could use like a creative, like, let's look at this. Like for the marketing, they're looking at the ROI on Google, and I get it, but like, what about chat GPT ads? You know, how do you work on a partnership with them? Sure, cut the take rate, but you know, I'll connect you to OpenAI partnerships so that you're actually native in the LLMs. And if someone's asking a question about a group, it comes there. You could also do a chat GPT ad, you know? So they're looking at their break even sort of marketing mind and being like, this dollar spent is bringing in $1.2 or $1.5. But I think that they're not thinking about what the best marketing spend is and just noticing that they can sell Groupon because it's easy to sell deals. On the supply side, it would be way easier to keep people there and convert them there if there was a better selection. There's a lot of good deals on there, but they can use AI agents to reach out on email and talk to a happy hour. Like, hey, we scoured the internet with an LLM, crunched a bunch of tokens, you know, call it, you know, 10 billion tokens. And we found all of these deals. And instead of reaching out to them and being like, hey, you should go and put a deal on Groupon, you're looking at their menu and having the LLM decide what do you think would be a good deal that the consumer would like and manager would approve, and then just sending them, hey, this is Groupon. We saw your menu. We think this would be a really good deal and drive people in the door. Would you be open to coming onto our platform? And if they do that enough times, you would see the supply side explode, and demand sort of meets supply. And then it's a question of like, okay, well, you kind of got to check Groupon if we're going to do anything because everything's on there and everything's cheaper on there. So there's a lot of room for improvement on this.
Yeah. So was there anything else that we hadn't covered from your article that you wanted to specifically highlight or anything like that? I was going to do that, and then we can maybe talk about the earnings since that came out this week, conveniently enough for us to talk about it live.
Yeah, I mean, I think that they should be blasting the buyback here. They bought back 7% of shares, so that's okay. But in reality, like, if they, based on the $220 million of cash they have, based on the free cash flow, based on the sum up stake, they're going to have more cash than shares if we stay at these prices. So over the next 2 years. So like, they're kind of like buying 5% per day or, you know, something like that. It still adds up, you know, 7% in a month and a half. Like, most people would be lucky to get that in a year. But what I'm hoping to tell management and have them listen is like, you can get away with 10% of volume per day. You know, the limit is 25%. That would certainly drive the stock up. But I would just snipe as many shares as you can at a lowest price as possible until the next filing. And then, oh, by the way, 25% of the shares are gone. And then everyone's going to realize it, because I don't think the shares are going to be this cheap come next quarter.
All right. Speaking of which, this is Q1 2026 results. This is just the press release, and I can flip over to the 10Q if we ever need to. It like we discussed in the back room before this, like the headline numbers, not so flashy, not so great. But as you know, sometimes those can be deceiving. Can you kind of maybe walk us through this, Nick, and let us know what we're missing if we're just looking at the top and bottom line numbers and noticing that this company missed, I think it was 26 cents a share EPS negative, and they were, what was it? I think 13 million was the loss for the quarter. But like, what's the nuance that's being missed when you just look at that?
Q1, they typically always it's their worst quarter because people will buy a Groupon in Q4. You know, hey, honey, I got you a massage, and then she'll cash it in Q1.
Yeah, and we can look and kind of see it here. This is the Fidelity page. So Q1 last year was 117 in revenue, and then from there it kind of started drifting back upwards. And let me see what it was for.
You can really see it in the cash flow statement. There is a billing lull, but the cash goes out the door to the business when they cash it in. And just Q1 just is the biggest concentration of cash ins. Can you go back to the press release? That's fine.
Sure.
So it's North America has actually been strong for them. If you go to just the top, we could go all the way through it. North America has typically been really strong for them. It was down 1%. A large part of that, which they mentioned on the call as well, was it was a crazy cold winter. So that actually had a 300 basis points influence on the company. And
right, because if you're not going out because of how cold it is, then you're not going to be.
It's pretty experience based. So that is a little bit better than people thought. The FX in the gap in income was like a $7 million swing to the negative side versus the year prior was a $3 million gain. And then they also had to pay taxes, even though they lost in like the countries that they're in. The gap adjusted EBITDA. So 12.8 million compared to positive 15.3 million. But if you add back $2 million in severance still in the SG&A line, that's actually 14.8 and would be a beat. So it's basically in line with last year. And last year when they printed that 15.3 number, and again, EBITDA is like kind of what this thing trades off of. The stock went to $42, and then they ran into, the website got kicked off. They had to hire a bunch of Indians to help fix over a 3-week period, and some old ladies.
So so when we're talking about like the adjusted EBITDA number, that's kind of the reason why, even though the like headline numbers were kind of bad, that the stock rallied pretty aggressively on the not I don't think when the earnings came out, but like the day after, wasn't it right?
It was actually. It went down to $13, and by the end of the after hours trading, it was at 15. And then the next day, it went down to 14 early before I got up. I'm on the West Coast, and then I get up at 4:45, and all of a sudden it's like rallying back, and it's at 15. And then when the call starts, management just sounds confident, and like honestly, a lot of people don't know who the management team is, and I think people just started buying immediately, like Sankpo just like comes out and he's like, hey, like, listen, this is where it is. No bullshit. And then they mentioned the EBITDA number, which, people were talking like, I was telling my Substack that, but apparently people didn't understand that. So then it starts rallying. And the other thing is it's just positioning. Like people, you see a bad print, the stock goes up. It's like, well, there were no sellers. Like that's it, like there are more buyers than sellers. And this thing is so overhated, and it's still cheap at $17. The next quarter is going to be, I think, way better than what the analysts have. And it's kind of, I had this with Jack because of the tariffs, and they had the worst holiday season ever. And as soon as the print comes out on Q4, it's like, okay, well, worst is behind us,
Right, because even though like there was like you said, some of the weather issues, you look at the top line number, it was year over year flat. Like it was 117 this time last year, and it's 117 this year, even though things were supposedly worse.
Yeah, but also here's the other thing. So at some point last year, they had to shut down their Italy business. That was $25 million of EBITDA, so that's built into the number a year ago. Again, the weather was 300 basis points. The old the old women, and that's another
Right.
major issue. But it doesn't have anything to do with the business,
Hmm.
trajectory, right? And this thing
Right.
is growing for the first time, maybe not technically this quarter, but in a decade. It's been, if you look at the chart when this IPO'd, it's like it's insane. So
Right.
yeah, Groupon.
Uh, and then they gave kind of some forward outlook. It looks like.
They
Was
reaffirmed.
there anything about the guidance that made you feel a little bit more confident, or was it just pretty much what you expected? Or
No, well, when they reaffirmed the guidance,
Mhm.
I think it's super low. It's like, you see the print, and I see the print, and I'm trying to read through and see where the miss came from. I'm like, okay, guide's fine. Like, that's really, you're investing for the future, not the print that happened, at the end of March and is released now. So when they say I love this. They say at least 60 million of free cash flow. I think that's going to be like 110. And last year they said 25, 30, and it ended up being 45, 50, because they have a negative working capital model. So they collect the money and then they pay out in 3, 6, 9 months.
So is that why the balance sheet is a little funky looking, where it looks a little upside down?
Yeah,
it's not like it's like AMC upside down, but I was looking at the balance sheet. I'm like going, it's like I don't hate that, but I'm a little uncomfortable seeing that.
Are you talking about
now that you explain why they're doing it? It's sort of like some of these businesses do, where they are a little tilted, but it lets them kind of use that leverage, like you were talking about.
Yeah, I mean, they'll get the money in before, and when you grow, when you kick back, it's bad when you're shrinking, because
right,
because then
because
money
it just amplifies the way down.
Exactly. So that was their sort of death spiral for a long time. And also, I have no idea where they ever had 8,000 employees or 6,000 employees. But on the way up, if you're like pretty confident you're going to grow 10 to 20%, you get the money sooner. You can buy T-bill and get a little bit of return on it, or you can buy back shares. The risk is the flip. You want to keep a little bit of a cash pile, but they think that $85 million is more than enough, just in case something happens and they go back to negative 5% growth.
That way they got some cushion to work.
I don't think so, but as a CFO, you got to do that, right? Mm-hmm. So that at least number, I think, is going to be higher than the EBITDA for that negative working capital reason. I think it could be 110. It could be higher. It could be 120. And their growth, they're only guiding for 3 to 5%. I think 10%. And at this point, you're looking at easy justification at if you're growing 10%, you probably deserve 20 times EBITDA multiple. If that EBITDA multiple, you could say 50. I don't care. You could pick any multiple that would be normal, 15, 20, 25. Let's just say 20 for easy math. If it's $100 million on a 20 times EBITDA multiple, because it's not growing 3 to 5%, it's actually growing 9 to 11%. That's a $2 billion enterprise value. So
you think they're lowballing it to keep expectations?
Yeah, these guys
tempered. So, and I mean, if they beat it by as much as you're talking about, then that looks great for them, right? So, are they just lowballing it for that reason?
I mean, that's what they did last year too. But I think that they've gone into so many. They're just like, listen, we don't care. We're buying back stock. We own most of this thing. We don't need to we don't need to set a bar high that's stressing us out.
Right.
We just need to set a bar right where we know we can work, and there's no need to be.
And they literally say at
right.
least.
You're not NVIDIA or something.
Their Q2 guide 13 to 15 I think it's going to be 20 in Q2. And then that totally rewrites, what the rest of the year looks like. So, it's $700 million market cap right now. If you do a $2 billion, 100 times 20 or $1.5 billion, there's a lot of upside. And again, I think you pull a lot of levers, and we're ignoring the sum up stake and the buyback in that math.
Mm-hmm. So you're talking more like a company that you think has already pivoted and now they're in that growth, just the start running phase, rather than, they're still working things out, still trying to keep the stride going and everything like that.
I think they've done all the hard work, and I'm coming in and I'm like, hey,
that's like before I even started doing this YouTube channel, like during COVID, that's a lot of the companies I chased, like Huntington Building Partners, some of these companies that were just dogs coming out of COVID, and it looked like it's just right at the edge when it does the flip, and you shoot for the tackle's right hip as you're turning the corner on the turnaround, and you just let it carry you all the way.
That's right. The marginal, like I could vibe code a new look in a weekend. I could make an AI, I could plug in Qwen or Llama or work with, Enterprise, OpenAI or Claude in order to make a chat bot, right? I could do group on groups. I could vibe code that. They've done all the hard work on the data side. It's the back end. Now that the back end's there, it's like, this is, it is a super downstream beneficiary. So some of that data center CapEx may have ROI. You know what I mean?
Maybe.
I think I accidentally.
Yeah.
Here it is. So I had a few general tech stuff for you. I know last time when we talked about Intel, we were kind of giving them shit because it didn't look like they were doing much of anything. Apparently, recently first of all, the Intel has been ripping, and I've been still trying to figure out why, other than it's Intel.
I mean, it's a
I get it. I have an
agreement,
Intel computer, but
it's a government
deal. I think though is good. This is a good direction where it should be going because. And correct me if you think I'm wrong here, Nick, because I know that you're, like you said, you're the this sort of electronics, sort of like the processors, the nodes, all that stuff is kind of your thing. I think it's good that Intel is moving more towards the chip making and its foundry stuff, because quite honestly, I wonder how much longer run room there is for x86 when ARM looks like it's becoming the better code set, set for processing. Yeah, the architecture. Yeah. Thank you for the word I was looking and I kept missing it.
I don't know. I think x86 might be pretty sticky. ARM, all of this stuff, like everyone wants to go and dive into it. And, I was just talking to a friend today, and, we're taking Bloomberg data. We're looking at the forward, trying to back test and figure out what's the highest predictable. We come to enterprise value to sales, and we're not going to go back 20 years because we're going to just focus on the AI era, or everything is going to look stupid. And we're looking at the SOX, EV to sales, looking forward. And it is 4 standard deviations over the mean since March 2023. So I would say, first of all, that Apple deal for Intel is going to come into play in 4 or 5 years and not be a huge
right. It's not going to be immediately. You're going to have to wait before it actually shows up.
Right. It is super gamma central, and for people.
Let me double check here, because I forgot where Intel is even at right now. It's a ridiculous price, isn't it? Like 90 something.
No, it's well over 100.
It shot up to like
124. Jesus, where have I been?
Yeah.
It shot up to like 140.
What are you people reading? That you think like again?
Maybe not 140, but 130.
I like the underdog story of Intel and its feistiness to get into the foundry and it getting into GPUs and fighting the good fight to get better, but like $125.
No, they should issue. All of these companies, they're caught up in this options turbine. People are just call option buying. They should all issue shares in size.
Oh, absolutely. Intel needs the equity, continue to build out its foundries and to build out its business and to compete with, NVIDIA's getting ready to bring out its own CPUs now. They need to be they've got 3 competitors now. 4 if you really talk about Qualcomm, but it's crazy.
Micron, SanDisk, ARM, all of these companies, Qualcomm even, they should right now hit 5% of their market cap at the least, because then your book value is at least building, and you can use that money to keep your growth rate where the market's going to expect. And it's like,
But what happens when Samsung drops the hammer and China gets into this? And
well, Samsung doesn't have access to U.S. capital markets, so
right. And Samsung's also starting to have its own problems. I saw where they're having a whole
all
strike.
right, well then let's just say China in general. Like, when do they come into the memory game? Because they can eat some of these legacy companies.
I think China could. They're working on HBM4, and I think they have a chance. The lithography machines are a real big problem for them not to have.
Yeah, because they're basically banned from getting them.
Yeah,
right.
And they can't make they're trying, but they're not going to make ASML level machines for a long time. Now they could probably make Lam Research type machines for memory. I don't even know if those are outlawed there, but these companies have to be thinking in the best interest of long-term shareholders, not weekly call buyers. You know what I mean?
Right.
100%.
Like, this thing is so far extended, and I think it's going to continue. And I might buy some weekly calls, because I don't know if.
Well, I mean.
Well, now they have. It's not even weeklies anymore. I mean, now you can buy
0 days,
like 0 days, on.
I was on Friday. I was paying attention to Groupon. All of a sudden, like, Micron's up how much today? Like,
yeah, SanDisk was up like $200 on Friday.
Yeah, and people
the amount of money that's going
and
into,
it was down like $70 the day before, and
that kind of brings me to another question. Like, I know that we've kind of gotten, well, first let me find the article that brought this thought to my head. It's kind of a two-part. Part one is, where do you think you set on like the hardware side? I know we haven't, I don't think we've gotten to the high point as far as integration with AI, but it seems like we kind of hit like the first plateau, and it seems like a lot of these hardware companies are starting to find, well, where do we go next? Because the software implementation hasn't caught up yet. And so, NVIDIA, that had like this huge rip through like last year and a half or so, is starting to kind of, trade in kind of a range area.
It's sideways.
It just went to 215 on Friday.
No, it's at its all-time highs, but it's been pretty sideways.
It's not been ripping like it has been. Let's be honest there. But like, do you think it's going to be a little bit more like this for a while, or are we going to see some crazy, like, at least on the hardware side of it, or is it going to be more like the software, like integration? Where is the who's going to make AI work, and then you'll get another side on the hardware? Or
I think hardware right now, the picks and shovels for the most part, completely uninvestable if you're looking at 12 months.
Because they're so high and off the ground, like a lot of them.
You can trade it though. I mean, listen, you can make money on quantum, but so you got like what we were doing, the forward EV to sales that included. It's not like we're just starting this hockey stick function, right? Like NVIDIA was, guiding for 100% revenue growth for the past couple of years. So the fact that
but then they kept beating it.
What? Yeah, kept on.
Then they kept beating it.
Right.
Yeah, and that's the part whenever I hear these people that say that NVIDIA is just a fraud, and I'm like, but like it's not like the price is so detached from what they're doing.
I mean, they can talk about circular stuff and whatever. It's like, if we don't have NVIDIA, we would be in the Great Depression right now. So,
yeah. I think like the only one on the hardware side, and maybe this is just me being biased, that's like still, man, it had the run today, so I don't know if I'd call it undervalued, but like Qualcomm, and it's mostly because, and I know it's still a far ways out, but like when you have like that, I sort of look at it like I did Apple, where they started doing the SoC and started getting real returns out of their ARM SoCs for their platforms. And now Samsung's starting to put them in laptops. And I think for most consumer grade, like not your high powered, like desktops, but like your laptops and your consumer stuff that you find in Best Buy, that's where the market's eventually going to go. So when I look at Qualcomm, how it's being priced compared to the rest of these companies and where it could get allocated, that's like right now its price is getting a little crazy because of, you know, people are pricing in all the AI stuff and self-driving that they're getting involved with. But like it's really hard, like you said, to find a hardware one that's like not ridiculous.
Yeah, the analog stuff, the legacy stuff, like it might be time for them to go. But this is like just literally how a bubble happens, right? You have a real thing that starts something, right? Real
like the .com bubble.
Right. Like the internet, you know, and then all of a sudden, you know, fundamentals are improving, people are getting excited. And then, you know, it starts to go into this new slope where, you know, people have to, like, the analysts are consistently raising their price targets. People are like consistently having to say, what if it's better? And what if it's better? And, you know, EPS is going up and, you know, fundamentals are improving. And, you know, you can see the end of the road when people are like, the rationale that like, oh, but like Intel's up so much, Qualcomm must go up. You know, looking at analog, that's when like everything that's remotely related,
it's all over. Yeah.
Because people are just taking the most expensive thing and being like, well, this thing is so much cheaper. Like we have to bid it up to like at least here. And I think it's going to end no bueno for a lot. You know, NVIDIA might be fine, but I don't see how you buy into semis right now. Like if I were to say buy anything, it would be like semi cap equipment, because in order to continue to beat expectations, and expectations are actually starting to be like high. They've been high for a while and they kept on beating, but like at some point you can't.
Yeah, they're still like Sandisk just had earnings and they just killed it. Like their revenue was up 251% year over year. Like it's
what if they start putting data centers in your own home?
Oh my god,
Amy,
I saw that.
Amy showed me this, and I was just like, what?
That's Pulte, yeah.
With PHM,
Pulte
not
Homes.
Pulte. It's PHM.
Pulte Homes.
Pulte has nothing to do with PHM.
What is? Oh, that's Pulte. Oh, okay.
Pulte Group is
I just
PHM,
saw that.
right?
I thought of you guys.
Yeah,
Yeah, I know, right?
So
and that's why he calls
nothing
himself
to do with
Pulte. He
that.
wants everything that has to do with his family to be connected to him, even though he has nothing to do with it.
And it's not. He has nothing to do with PHM. Nothing.
Okay. I do think distributed compute is a thing. I don't know about NVIDIA data centers in the home, but like,
yeah, this is weird.
Like,
I don't think they're even
just
think. I don't
seems
even think
too
they're talking about putting them inside the homes. They're talking about putting them outside the homes, almost like air conditioning units or something like that. Like I don't think it's
like
Rocket Lab was up 34% on Friday.
Yeah.
What was it?
Rocket
Lab.
Oh my god, yeah.
Oh, I didn't even see that in the sidebar. Yeah, apparently 35%. What?
Yeah.
Akamai was up huge. You know, it's just
CMK.
Yos, I forgot
Is this
about
yours.
Oh,
who's tracking CMK?
Guys, I'm getting FOMO now. What the hell?
Where's CMKM? What are you saying?
You don't see it right there under NVIDIA.
Oh yeah, I do.
Here.
Correct.
Yeah, what is that? Is that just the ones that you've looked
That's
up?
like the scam code.
No,
No, this was just like here's the article, and then Yahoo Finance is like, by the way, you missed your moment. Please buy in so we can bag you.
Okay. 31% short interest on that one too.
On which one? Rocket Lab?
EOS. They had a really bad, I was meaning to
because they have really bad earnings the last time.
Well, they had this huge issue manufacturing, like a 3-floor bad setup, and they're starting new manufacturing. So there is a somewhat of a story there. I would just consider people like, you can totally buy in and try to make money. Just consider the fact that like, you don't have to believe, like you don't have to die on the hill if it starts to look bad.
Diamond hands. Yeah, know when to quit. Know when to fold them, as they say.
Yeah. You can, I do think it's crazy
just
animal spirits.
Like if you get bagged on something, then just wait it out. I mean, like if you get back like crazy, because now these things like, sell off like crazy or whatever, like that doesn't mean that you should average down or buy more. Or whatever.
Just because it's down 10% from where it was a week ago does not mean it's a buy. And
oh, sorry, go ahead.
I would just watch the 20 days on everything, on stocks, on whatever. When that goes, like, figure out something technical where you're just like, you know what, like, I'm going to not look at the market for 3 weeks, and maybe
I look at the 20 and I look at the 200 as well. So I mean,
people lose the most amount of money buying the dip, because they and then it goes down like more, and they buy more, and all of a sudden they're on margin, and then it goes down more. And that's how you really lose money. If you just buy a little bit here and now it's down 35%, like, you're not dead, right? Your cost bases are all probably still below you.
You're not buying like a ton at a time. Like, just buy 5 shares at a time, whatever you're going to do. But you don't have to buy, like, you don't have to full port into everything because it dips.
Yeah, I would be careful on margin too.
This one was one that we haven't talked about in a while, but I saw you bring it up, Nick, and I was just kind of curious what your thoughts were on Wolfspeed.
I don't think we've talked about this since it went
bankruptcy when it was ongoing.
They threw so much money at this company and in and out restructuring. Silicon carbide is a strategic, important need, and there's no real competition in the U.S. And it's one of those specially kind of situation things where if you look at how much money it would take to like have what Wolf has, it's like 8 to 10 billion at least. So 2.3 billion market cap. I think that's an interesting play. Like, I'm not saying don't take risk. I'm just trying to be like, this is kind of like what I would think is better. Another one, I give this to my Substack, but I'll cheat a little bit here. Tenable Holdings. They do cybersecurity in a way that's super underinvested, talking about operating systems, typically Linux, and it's a $5 billion market. And with Mythos, like, threats inside of the systems, not just the perimeter, that's typically CrowdStrike, and they do end-to-end on Microsoft as well, the Palo Alto and stuff, but like the defensive linemen of cybersecurity. So, we're in a bull market, that's for sure. I think strategic risk, I own a very little bit of Wolf. Most of my stocks are orthogonal. Biggest position by far is Groupon, XNet, Jack, stuff that doesn't need the AI to work.
No,
it's not even going down
What
that
about
road.
look at it.
What about
Don't look at
15
it.
cents per share?
You know what she's
I'm
talking
telling you
about?
that you'd be overpaying.
Yeah, you would be overpaying. Yeah.
Don't do it. And it's not AZRH, it's another one.
Ondas is a tough one, Jack, because
I think that's one that I've been looking. Let me
Yeah,
double
but
check.
they
I want to
Grown
check my
company.
screen or short
warrants.
list.
They issued a ton of warrants, and every time it takes off, they're selling into it. So like, you have to take a look at that. Like, it for me, or at least for Ondas, like, until that's
sorry,
done,
different.
Go ahead.
No. You go ahead, Amy. I'll finish it.
That was it.
Oh,
Right?
okay. It was really close to a ticker I have on my screener short list, and that's OMSE. So I thought it was something I was, but it wasn't.
Well, they are one of the leaders in drones, and they definitely have. I think they have government contract writer or something, but like, I don't know. I don't have it pulled up, and I don't.
They have an
even know what
Israeli
I'm looking for.
contract. I think that's if you're a good trader, you can FOMO stock this stuff.
I have traded Ondas, and it's been fine, but you just have to. For me, it's just not something that I can hold, because every time it pops,
I understand you're
sell
on
into
shaky
it.
ground and stuff like that. And typically my role for something to be investable, I look at Warren Buffett and I'm like, do I have high confidence that this is the winner? Like, it's easy to sell a drone story and a couple DARPA contracts and whatever. And it's like, someone can cobble together a narrative of why it's going to be a 10X from there. But, if you read, I don't know where it is, Engines That Move Markets, you realize that like a lot of that early stage stuff ends very poorly. So
the reason why I stay away from a lot of weed stocks, because a lot of them are just dilution machines.
That's a great example. Yeah, the whole Tilray thing.
Oh Jesus! Yeah. Oh, Tilray Sundial.
Yeah, that was an insane time. What was that? 2017.
Pretty much. To send us into our next segment, if Nick wants to stick around for the fun discussion we're going to be having, I believe it's in Platinum's background, but I thought that this would be a good way to talk about it while still talking about some of the Nick stuff. Here, Nick is more dealing about, private equity and saying,
Nicholas, did you steal that screenshot from me? Did you grab that screenshot from me?
That you stole from me?
I did steal it from you. That's why I'm asking.
Exactly.
I know where it came from.
but basically,
you're stealing my DD that I stole from somebody else.
Right, exactly.
If Michael Burry thinks that 5x EBITDA is bad news bears, what do you think's going on in private equity?
Yeah, that's it's a very niche joke based on everything I've been talking about. But the non-PE part, like the EBITDAs that these PE companies like their ad backs are crazy. But the 4 times coverage on cash flows of the interest, like these private credit, underwriters are like, 1.5 times. That's fine. Across like the book, so it's just kind of going there. And I don't like listen to Michael Burry to like decide how I feel about things. I just thought it was extremely fun.
Yeah, for sure. But that does allow us to transition into our topic du jour to start out the meme stock section. And if you want to have a jolly good time and stick around, at least for the less meme stock and more like technical analysis of the deal, we're more than happy to have you around for as long as you want to stick around, Nick.
I'm interested. I got to get dinner at some point. I'm a little late on dinner, but I'm definitely interested in GameStop.
Okay.
Like GameStop, in that you think this is a good thing that they're doing with eBay?
I think it's really interesting, and I think it makes a lot of sense. I think it's going to be a lot of dilution, and I don't know if eBay shareholders are going to be fine with it. But if I'm a GameStop shareholder, you're going from brick and mortar to all of a sudden you're owning a platform.
Mm-hmm.
It's like similar to my Groupon thesis.
Yeah,
but coming from
but they're going to use
a
ton of cash, and they're going to dilute the shit out of them.
Yeah, but they get eBay. Like if you're owning a bunch of brick and mortar trading stores, like there are clear synergies, and then you get to own eBay. So you might own less of the combined entity, but you're getting diluted a little bit because you're paying a premium for it. If they were paying no premium, it would be, well, you own all of GameStop and now you also own eBay, and it's just a mix.
I will say that
there is leverage, though.
Right. I know Running with Bears isn't here to take credit for it, but we did have, and I've got the short clip here from it if you want to watch it at any time. But basically, Running with Bears predicted the exact range where Ryan Cohen's very confident offer was, where he said that Ryan Cohen would at most have $20 to $25 billion to leverage. And it's just, man, 20 billion. Wasn't that just kind of on the fucking nose?
Yeah. What's the combined pro forma free cash flow on that?
Free cash
they
flow.
Say? It's definitely
somewhere.
It's definitely in there. So he's going to cut marketing. That is $2 billion. That might cut growth. That's the question. But
so it must be here's. You look at the other one here. If it's in this thesis, is it this here?
The one hairy thing about this is the incentives agreement for games.
Yeah.
So I think he has to waive that to get this done. Once you take that out of the equation, then.
But I think that takes kind of out of the equation why Ryan Cohen wanted to do this deal, because it almost instantly.
I don't think that is the only reason why, though. Like, I think he's just a lot more interested, honestly, in this company than he is with GameStop.
Yeah, I agree. It's a better business than GameStop.
I agree with that.
I think that is kind of a fair point that he definitely is more interested because
you should
he
just say
admitted
that.
as much in an interview.
Yeah,
that he's way more
Right.
interested.
So the EPS, I'm not so concerned. You know, the leverage is fine. I don't know what did TD say that the what it was 7% or something
20
like
billion.
that? No, but what was the cost of capital on that?
Oh, I haven't
Let
looked
me
at
see if I
it.
can find the article. I know I have it in the tab.
Yes, very slow.
Because
Tony knows that.
He's still bragging that he sold before Burry.
Who, Tony did?
Uh-huh.
Did
The
Burry
eas-
follow you, Tony?
the easiest short in the world was after that CNBC interview. I think you
Oh
recovered.
my God.
Oh,
I think
yeah.
it-
Well, just based on the arbitrage fact of it, because if there's a deal, then, you know, GameStop doesn't get a free lunch. You have to subtract the cost of the acquisition. So the price was going to go down. It was just a matter of how much. So, yeah, absolutely.
Conversely, if you buy eBay here, you know, you either are the deal is going to break or you own eBay that has a lot of pressure on it because Ryan Cohen pointed out a lot of inefficiencies. So,
Do you
know,
think they take the deal?
what?
Do you think they take the deal? Do you think eBay takes the deal?
I think that Ryan Cohen's really good at playing the internet game. And I think that the pressure is going to continue. And I do think that there's a potential that if he proxies it, it gets accepted. I don't know. That's the real question. But in terms of the outcomes, if you buy eBay stock, your worst case scenario getting the business that it was before.
Already there.
Mm-hmm.
And even if you get that business, he has put pressure on the $2 billion. Like there's a lot of inefficiencies in their SG&A line and just in operating that business.
Mm-hmm.
So maybe you get the same business, but it gets better because an activist essentially came in and said, here's what you need to fix and gave the playback. And then if the deal goes through, you get half your money back in cash, you know, you get $60 in cash and you get this combined strategy that should be pretty exciting for, I think a lot of funds would buy into that. I think a lot of retail would buy into that combined. If they,
Retail for sure.
yeah, I mean, it's going to take funds too at that market cap to drive it higher. But,
For sure.
you know, they think they can get $7 of EPS. Like, I think they could sell that story, you know. Sometimes it's about selling the story more
Sure.
than
Right.
More than actually do. Yeah, I agree.
Especially when you're talking about something that's kind of tech light and it's more driven by the narrative of what you can do and then sort of the price adjusts based on did you get to that narrative or did you not?
Yeah. If you're going to hold it for 12 months and be along for the full ride, you know, some people are going to be in it for the trade. I really, really do think he was right. And I think the same thing about Groupon, where he said something like, I could run this out of my basement. And I was talking to my friend at OpenAI and I was like, I feel like 10 of us could run Groupon. Like, why are there so many employees?
Yeah.
You know, you have one guy in charge of all of the sales agents. You have one guy in charge of the engineering agents. You know, like I do fundamentally think that platforms of all this software that's technically software are really going to benefit from AI as long as you're agile enough where a new entrant, because the cost to being an entrant is going to go down
Is
a lot.
lower and so there's less of a moat.
Right. But if you think like a startup and you move fast, you got more access to capital. You got probably cash on the balance sheet. You got brand. That's really important. That's not going away. So I kind of like it. Didn't like that interview, but he recovered in TPS.
He had more
I
interviews.
definitely
okay?
think
I didn't like the
progressively he
interview, though. It was
got
very
better
awkward.
interviews because
He
I-
clearly doesn't like CNBC. I don't even know why he bothered. Like, just say no.
He
next
hates
time.
them.
Stop it.
yeah.
Like,
Well,
he
that's
just-
what I said at the beginning.
Like, why would
when
you take that
everyone-
interview and just go on and literally say
because
nothing?
that's what I was
It was
talking about when
childish.
it happened.
Just don't take the interview.
Yeah, just say no.
He could have been cocky and arrogant, but just wittier, you know,
Right.
because a lot of people walked away from that interview not understanding his point. And you guys got
Right.
it. It's about dilution. You know, and Sorkin was
Right.
like, but you have 8 billion market cap. Like,
Right.
how do you only, like, he's like thinking that it's, you know, that's the only equity that you could ever have.
Well, I think Sorkin was really just trying to get him to give more details about the deal than he was willing to
Because
give.
because
Yeah, but
Platinum, you said even coming out of
But
the
you shouldn't
deal
have
that he
taken
did
the
for
interview if you
Fox
weren't willing to give
Business,
those details.
that you were confused as to how the equity part was being paid, right?
Well, I'm also not an expert, so I was
Right.
like, what is he even saying? Like,
It's
what does he
more of a-
mean?
It's more of a merger than an acquisition.
Right.
I mean,
Yeah.
it's
And that's what I
what
think-
really what it's more of is him like having eBay like
Acquire
absorb
GameStop.
them or buy them out. Yeah, like to absorb them and you know, like that's
Far
really
reason
what
is
it is.
Discord.
He's calling it an acquisition, but he wants to be in charge of the combined company.
That's right.
Um,
But he wants eBay to absorb them basically, and he wants to run it.
yeah.
Yeah.
So he's basically using GameStop as collateral and saying, yeah, like it's
See,
Like,
That's what
yeah,
it's-
we
that's
can
what's
add to
happening.
eBay's business.
that's
And
right.
listen, it's better than what Masa-san is doing. You know, Masa, he's got like his arm stake and he's borrowing against his arm stake
No,
to
I mean, Musk is
invest
always doing this.
in something else. And he's borrowing against ARM and OpenAI. And, you know, he's investing in other things in AI. Man,
Yeah.
software, you know, in terms of the risk spectrum, it's not that bad to put $20 billion onto that combined company.
Yeah.
my big problem, I think, just looking at the deal from that, and maybe correct me if I'm wrong, Nick, is just that just structure it like a regular old like cross merger rather than like an acquisition. Because if you're looking at it from an eBay side, maybe you trust, maybe you don't trust, you know, Ryan Cohen. We'll neutral that out. But if you're looking at it like I'm getting a forced taxable event where I get half my, you know, interest paid out in cash, and then I've got this kind of stake that I already had to begin with, and now I get to share it with people I didn't need to share it
Well,
with.
I don't
for
think
very
you can
little
cancel
return.
out Ryan
Like-
Cohen. He wants to run this thing, so I don't think you can.
No,
just
no,
cancel out.
I'm saying, like, if you trust him or you don't trust him, that's kind of a you decision. That's not something we can really like
That's gonna be
you know,
gonna
look
fluctuate
at without
into the future.
and separate our own bias from. So you have to just look at this part of the deal. Is like, to me, it's like, why would you do that deal even if you agreed with Cohen's understanding of the business and wanted to change it? Because I'm having to give up an interest to something that doesn't really add much accretive value, and the cash that I'm getting, I'm having to pay back anyway because it's dead on a balance sheet of company. Like, say if someone was like in the Paramount deal, the Paramount Warner Brothers merger, it's being completely taken out of off my hands. The debt's their fucking problem. Who cares? But here it's like I'm getting paid, but that debt I'm having to pay back is return on my investment.
Wait a minute.
So,
Wait a minute.
like,
Wait a minute. Noisy Corax. Are
why
you saying
would
you
I-
don't believe in accretive delusion? Is that what you're saying right now?
Yeah, I really don't. I don't believe in this penny stock game of
Yeah.
But like,
Yeah.
see, that's the problem I'm having. I'm not saying necessarily that the deal itself, like you said, there's definitely synergies. There's definitely things that eBay could fix. The deal structure itself, I think, is fundamentally flawed. That's the problem.
So I mean, I wonder how many people in eBay have like significant capital gains. The taxable event
That's
thing,
right.
I didn't think about, but you know, if you're a fund and you've been in this, it's up 20%, you know,
Mhm.
okay, you know, you pay a little bit of capital gain or whatever it
Well,
is.
and what kind of, I haven't looked at eBay too much before now, but like, what kind of stock was it before? Was it just like a
Let me
sleepy,
pull it
you
up
know,
here a
It
second.
was sleepy.
kind of up, down? It's
It was
not
sleepy.
like,
It's done
It's
pretty
at
well.
all-time highs right now.
but
it's-
but what I'm saying is, it hasn't been super volatile, right? Like it wasn't,
Yeah, no, it was a sleepy performer. It was dead for
Right.
a long time.
it just, yeah.
Sold PayPal. There's a lot of latent value there, and I think that's why eBay investors are in it. And in order for them to vote for this deal, they got to believe that Ryan Cohen's going to unlock the value, which is
Right.
the reason why they're in it. And I think that
Right.
It's
You
been
have
on
to
a
believe
wild
in Ryan
ride since
Cohen
2024,
if you
where it
wanna do
just
this
started
deal.
taking
Yeah.
off from there.
you do. You definitely have to believe in Ryan Cohen in order to
100%.
want this deal. And what he needs to do is talk about the brick and mortar synergy. He needs to sell GameStop.
Well, he did. He did talk about that, and I talked.
I don't
that,
know
actually,
about
remember?
that so much because like I think that's where he's been really weak because like you said, Platinum, he doesn't seem very enthusiastic.
It's in that letter that you just had up.
No, he has said it in
3 lines. They're each a sentence long in that letter. Give me one second.
He needs to focus on it more because
he does. And the PSA partnership with Nat Turner on the
here.
GameStop board, like, and that's their exclusive authenticator for eBay. Like that is huge.
If you can get an eBay shareholder, hopefully chunks of them in funds to be like, listen, imagine if we had a distribution network behind this thing and anyone in eBay, if they don't want to like actually ship it, they can pay us an extra $15 or $10 and just drop it off at GameStop. That is a story where it's like, okay, like I see how that would unlock more value. I do, think maybe it's a little bit too bloated, and I see the value.
But Amazon already does that. Don't they already have that with UPS? And I don't think you have to pay for that. So
Amazon, to my understanding, has everything that's not unique.
It'd be more like the more accurate analogy would be something like Walmart does, where they have their online storefront, but you can buy and choose to pick it up at Walmart and not get mugged or have it stolen off your porch.
Right.
Yeah.
Because that was the analogy when I first heard this. I was like, oh, that sort of makes sense. I make my eBay purchase online. It gets shipped to my nearest GameStop, and I just go there to pick it up as opposed to it gets stolen off my porch or whatever the case may be.
But what about the trade-in thing that they have? Like, how do you incorporate, like, how do you keep like the trade-in business instead of people just like selling it on eBay or something? Like, the
GameStop stores already do that.
Imagine
and then you can sell them on eBay. Like,
imagine if you walked into a GameStop and you could drop off, a baseball card to get eBay points, and then you can buy whatever you want used on eBay. Like, I do think the combined network of, Walmart's done it. Amazon doesn't have stores really. They have a few, but the Walmart's a good example. Yeah. Where, if you're driving home from work, you can just bring a signed football or whatever, and you can drop it off and you can get credit to spend somewhere on the platform because you need something else. That bartering network effect, I do think has value. That's left on the table by eBay right now.
One thing in the interview that he did that I think was the best interview, which was 1 second. I gotta go find it. I have like 500,000 tabs on this subject. It's kind of bad. This interview. Like, I don't want you talking right now, Ryan. Please stop talking. The Justin Resells. He had I think the best interview with Ryan Cohen. I think there's some stuff that he was pretty weak in where he kind of ducked the question, but on the whole, we got the best description of what he wants to do with this business that we've ever gotten out of him, because the guy doesn't do earnings calls. He barely talks during the investor the investor meeting,
the shareholder meeting.
Yeah, the shareholder meeting. So like,
he's gonna dance a little bit.
This whole hour-long interview.
I just want to point this out. I don't enjoy his hairline.
No,
I don't enjoy my hairline either. But
no, he's. I think he is,
or his vocal fry. I don't get it.
I think he is smart. He saw. I was in GameStop. I made this
so mad right now.
Crazy LinkedIn video in 2020 about it. And then, it's just like the short interest. It was easy money, and it's easy to see the net cash on the balance sheet. I think he is smart. I think he needs to work on not being holier than everyone. And I think he did do that in this interview, where he's like, listen, like, I have ideas. Sometimes, they're not good ideas, and I try to get to the right answer as soon as possible. I'm open, and he's appealing to sellers there, which I do think is
good, because what I have seen on eBay, one of their big problems is, to varying degrees, sellers have a lot of grief with how the platform operates.
Yes.
And that seems to be one of the biggest friction points with eBay that I have seen.
Yes.
And so it's good. The big problem is like that I had with the interview though, was it's one thing to say, I'll listen to you. It's another thing to go into the interview saying, I have already heard you, and here's what I'm going to fix. If you see, like that was the one problem I had with this interview, is it sounded more like flattering platitudes flattering platitudes than it did. I already have a plan. Here it is. I'm ready to execute. You know what I mean?
Yeah, his plan is based on the business side, though. I think he's inviting them in, because ultimately shareholders are going to decide, right? Sellers don't have a vote, but I think that shareholders, when they see the comments on this video, they're going to be like, oh, okay. So it's going to draw attention to the people that are making the shareholders money, right? The sellers if they believe that this platform can get better and Ryan Cohen will listen, I think shareholders will believe it as well. So, I agree. I personally probably would have come out with a 20-page pitch deck on every single reason.
But that isn't Ryan Cohen, though, from what we've known.
This has not been executed flawlessly, but I also probably wouldn't have thought of selling, my used socks on Twitter. I mean, on eBay, and he's got skills, I think.
I mean, he sold his underwear for what, $125,000. So it's not the worst idea.
Staplegate.
I thought it was $250,000.
Was it?
I think so.
250? Oh, okay. Maybe it was 250. Yeah, I can't remember.
One of the other things from this interview that I'm glad that you're around for, Nick, on this one was because I don't understand it so much. And part of it is the selling model doesn't really connect with me. But apparently Ryan Cohen is big about live selling and thinks that it would be good for eBay. It's a lot more popular in Asia than it is in America. But because it's popular in Asia, it has a real growth category to it. The sort of, like infomercial, like TV, like selling,
on TikTok,
but it's like a buy now auction where it's
they
like
do that
you
on
got the
TikTok.
video and
they do that on TikTok. South Korea, like they love that. I listen. I think that the way that we think about.
But how do you do a live auction?
I mean, in the thing it said he would do it at the stores could be a broadcasting studio. Literally, that's what the letter said. That you
auction off stuff that people are selling on eBay.
So you live stream like a Ricky Henderson card.
How do you pick
and make it into an experience and someone?
You do a live stream like we're doing right now, and you just you do the
but
auction.
Who do you give?
Live.
The seller like Sotheby's, and then somebody overpays for it because everyone gets to see it
because it's exciting. You're doing it like
and you have the demand. It must be this is the only time you're going to get it. It's going to be gone by the end of this video. You better put in your bid now.
Yeah, and meanwhile you could buy another one that's not being auctioned. That's also a PSA 9 or whatever. And I think there's
live selling.
Yeah,
I wouldn't say that's the biggest opportunity that I could see unlock, but what has eBay done over the past 15 years? How has it changed at all?
Well, they're selling more collectibles. That's what they did the last quarter, at least. I looked at their last earnings, but that's
a result of
so isn't GameStop.
That's a result of people selling collectibles. That's not
exactly
an eBay executive team, being like, oh, we're going to make sure that there's more collectibles being sold. They have this latent value that, same thing I see in Groupon, eBay's further along. Nobody needs to know that eBay exists and is still alive, but I see a lot of latent value in eBay as well.
Yeah.
And I always have, by the way. I was, why is the stock not moving in 2018?
Yeah. Well, here, let me see if I can pull the chart back up here again. We could kind of take a look at that real quick again, because it's weird because usually a lot of these companies, you talk about the COVID area, and that's usually when these companies like eBay were really well. I mean, I guess a couple of years before that, it really wasn't doing it, and then they got a little bit of a COVID bump, and then it's been pretty much since what is that, August of 2016 flat.
It was,
and
it
then
was $40.
2024 when the new
2024 is, and that's when they also partnered with PSA to do their authentication That's their exclusive authenticator.
I mean, it's a good chart. It's a good chart from what, 2024 to now, but it was dead for so freaking long. And I think it's, you know, it's got a lot more value to unlock.
Apparently we've got people also got quite, I think this might have came from your side. Yeah, it's paired. So there's someone from your YouTube channel asking questions about PTLO. Never heard of that. Let's pull it up.
Portillo's.
Portillo's, it was hot like 2 years ago. It's like a value, you know, this guy, Chu, so go on Substack. I'll retweet it for you. There's a guy that's been on Portillo's for a while. It's a fast casual hot dog shop based out of do you guys remember like Sweet Green's peak and all that? Like, why is this being valued at $45 million per store? Right? It's already penetrated. John Chu. Search up John's thoughts on Substack. He's big on Portillo's. I kind of like it, not enough to make it a concentrated position in my portfolio. But yeah, I mean, you can see the growth opportunities to justify how much you're paying per store, and it's relatively cheap if it doesn't grow.
That chart looks rough.
It was so someone came and said that they full ported it on one of my TikTok lives.
No.
He's like,
No, we tried more people, so many people about no, do not do that.
And I was looking at it, I was like, are you sure, bro? And he's like, it's going to 1,000 stores. It's going to 1,000 stores. And I'm like, that takes capital, dude.
Everybody loves a glizzy.
Yeah. I've never been to Portillo's. I would have to try.
I haven't either.
Product. I like hot dogs, but
yeah.
Who doesn't? Well, Platinum doesn't.
So
yeah.
I figure we're going to go to meme stock land from here. It's been great having you for 2 hours, Nick. I know you were talking about dinner.
I'm hungry. Maybe you know, go to Portillo's in Chicago.
There you go.
Some boots on the ground DD. You can be like,
go report back to us.
Yeah, I'll get on
eBay. Give us your glizzy report.
I'll get an eBay's private jet and I'll fly to Chicago for some Portillo's.
There you go. Or
right,
maybe
guys,
you'll get a private jet from Groupon when you become a member of the board.
Yeah, no. Well, I bet you Sankpo already has a private jet, not for Groupon, but guy is successful. So maybe we'll be friends. All right, see you guys.
Yeah,
see you guys. Nick. Thanks.
Glad to have you around next time. Maybe again, Nick. Have a great evening.
Sounds good, and I'll be in our group chat.
Nick.
Nick.
Yeah. Let me get things organized here. I see. Oh no, it did the thing. I don't like those. There we go. That's better. So yeah. We can get into that swing of things. First,
amendment number
we have the
9.
new S1. And the silliness around that. What's new about this S1? Can you guys?
It's amendment number 9.
Amendment number 9, and it's priced.
Yeah,
and it's priced like
very reasonable
share,
price.
Right?
$15 a share. Low price.
For the low price of way overvalued.
With $76 million in debt and $100,000 in cash on hand.
I think the big news about this one was that a bunch of people thought that it was effective.
Not quite yet.
Wasn't.
I mean, it will be, but not yet.
Not yet.
Yes, because nobody can read.
Yeah, Berta, I mean, that was amendment number.
That's the problem. It was like John Berta was saying, like, it's like what?
He doesn't even bother to look at it. He was like, "Can somebody tell me the difference between?"
He waits. Ask Elf.
Yeah.
All right. And then, of course, we also got a 10Q.
Early. They filed it early, Corax.
They actually filed it on time. Yeah, I know. Holy shit.
Not only on time, but early. It was still on the 15th.
Like a week early, right?
Yeah, we got her done.
Yeah, things still not looking good with this company.
Yeah, it's looking real bad, actually.
That have a negative shareholder equity of negative $63 million.
$10,000 in revenue
cash
per quarter.
of $55,000.
Yeah. Yeah.
Woo.
So they're pricing it at I think it's like 284,000 times percent more than their
Right,
revenue.
yeah.
That's $15.
Their market cap would be $3 billion, right?
4.
$4 billion. Okay, yeah, that's right. You said it's a little less than 4, right? Yeah.
Mm-hmm.
Perfect.
So,
and what's their
what's
asset
up-
value, or what's the
Oh, sorry.
how much?
$1 million.
Perfect. Sounds great.
I love it.
Or
Uh,
less.
$3 billion market cap.
I would normally put the warning to stay away from this, but you can't buy it right now. It's not trading, so no worries. No worries all around. Probably for the best. Then, of course, we had Amy had her interview. I'm starting with this one here, but we
Well,
have
it
a
was
whole
supposed to be a
list of
debate.
like just
Yeah, it's supposed to be a debate.
people trying like
It turned
trying
into an
to.
interview, but it was supposed to be a debate.
Mhm.
So why don't you explain that, Amy? I think we talked about it a little last show, but maybe you can tell us what happened
debate?
here. Well,
this?
how it fell apart instantly upon contact with reality.
Well, it actually fell apart like throughout the week.
Yeah,
It's true.
it was kind of continually falling apart. So,
Mhm.
and Junk Savvy has made her public declaration about it. But so, yeah, someone challenged me to the debate on the live stream. I said, I'll debate any one of you. She texted Rob and said, I'll do it. And I don't even think she denies that at this point.
Because she can't.
Right. So then the week goes on, right? And like, all the other shit happened or whatever. And I guess they were trying to reach out to Rob, her and Busy to find out the format and how he was going to introduce her and whatever the fuck else she wanted to try to control.
Allegedly, this is what she
Right.
said.
And so Rob's just been busy, like he's going back and forth between Florida and Missouri, and he's setting up this thing. He's doing Moe's Pizza, blah, 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 blah. He's trying to build his show. He doesn't have time to sit on the phone with them for hours while they instruct him on how to run this debate. And so he just said, look, I just need a confirmation from you, like yes or no. She never confirmed. And then it was like 9:00 at night, and like the night before. And P.S. I didn't get any, like, I didn't know what the format was going to be. I had prepared, I had gotten screenshots of, her talking points and what I assumed she would be bringing up. And that's what I was prepared for. I didn't have to have a conversation with Rob to tell me what the format was going to be or how he was going to introduce me. I just showed up. And
Right.
so like 9:00 at night, that night, he's there like, John Berta said that he'll do it. Do you want to debate John Berta? Or will you, or whatever.
Right.
And I was like, this is supposed to be like 2 retail people. Like,
Speaking of, not to jump the script too much, but I was going to have a section where we talked about John Berta's points, but not even the MMTLP people wanted to show up to listen to John Berta, so I don't think we should waste our time. It's probably because it's the same stuff he's always said, right?
Yeah, I think I was the only person that watched John Berta. That was it.
Left.
Nobody else did.
Remind me not to wear big sleeved sweaters on thing.
Oh, it looked cute.
And to mirror my camera. But anyway, so then they were like, yeah, it's not real fair for you to debate Berta, so we'll put you on. You can come on for an hour, and then Berta will come out to you. And I was like, fine, that's fine. I didn't ask him what questions he was going to ask me. I knew nothing about this. I went into that cold, right? And that was it. And Junk Savvy couldn't even bother to show up. Like, I didn't have any prep. None of this was prepped. None of these answers were prepped. None of these questions were prepped. But she's saying that because Rob didn't get on the phone with her and tell her how this was going to go, like, she couldn't control it. So she just didn't show up.
Mm-hmm. But she showed up to the Rob Carter show when it was just her by herself.
That's right.
Right.
And that was fine.
Right.
Yeah. And then she's
she knows
tweeting
how
out,
the show runs.
Then she's tweeting out, wreck the narrative, hashtag wreck the narrative shit with her, indoctrination bullshit that she does. Then, the S1 gets approved. They are sending around this very bottom part of the tweet, the second highlighted section right there. That's all they're sending out. They've cropped out the whole rest of that.
Oh, they love their cropping.
Oh, yeah. And so that
Hiding
says
the
that
truth 101.
trade station will, if the S1 becomes effective, trade station will fulfill the obligation or whatever. And that was from an email from 2023 about the subscription rights. And but what she's saying is everyone needs to be like tweeting to or calling these brokers and telling them that here's their opportunity to cover their short positions. They can buy this offering, or they need to buy this offering, whatever, for $15 to fulfill the certificate thing, blah, 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 blah. And she's telling them that this is who's going to buy this offering. But that's jumping ahead. I don't know if you want to, like, I don't know. Do you even want to talk
I
about
had
the
a
Rock
whole
Garden
list
thing?
of like when you were just like countering, like, first of all, we had Marduk clip out like the very key important things of your comment there and just made it about a blooper that you made in like, and then you immediately corrected it after that 30-second clip. So what was that section roughly about? Like, because this was
you have the stock, the 9th and the 12th, right? Oh yeah, the 9th and the 12th, the settlement days.
Yeah. And
because
how that you had, because I remember
S1
watching it when I was watching it, because I did it for one of my live streams, because you kind of wanted me to go over it and look over and see what things that you thought you could improve on. And I was like that part was perfect. One of the, I think the times that you did it just fine, because you explained that it's T+2 for it to settle. You needed those 2 days. That's why trading stopped when it did. Like,
well, because in the S1, it was very clear that they had to have settled positions by 12/12. So their whole gripe is that, you know, the positions could have settled on the.
Sorry, I'm laughing at Sam.
Okay.
When will we get the full transparency on the?
True. But
I have no idea what that's about.
So they're saying that it should have been position close only, and that it would have settled on, what did he say, the 12th, the 13th, and then the 14th would have been canceled. Whatever he was saying, it's nonsense. It's absolute nonsense, because the DTC eligibility was canceled, was stopped on the 12th. Which means brokers would have had to manually settle these things, right? They don't have like, you can't be digitally transferred without DTC eligibility. So I can't even imagine how they would go about doing that. But what FINRA said is that if we have to manually settle these things, it's not going to be done before the 14th, before they cancel these shares. So we can't do that. Like I can't even put a time frame on how long it would take to manually settle these trades if they continue to let it trade. And so FINRA said no, right? Like they tried to get one over on everybody, and they almost did. And FINRA was like, nah.
And then there was the whole, how did it get started trading thing? And like, the company itself specifically said
this guy didn't hold up under scrutiny at all.
None of them do.
He's saying that he's like submitted that video. What did he say? Go back up to the top. He submitted the video to like go up. The info was submitted by the criminals. Of course, John declined to update the information for a fraudulently submitted ticker application. Why did FINRA try to sucker John into fixing the market maker's fraud? So then I replied, well, it wasn't a market maker. And then I gave him like what an unsolicited and a solicited trade are. Like they're explicitly unsolicited trades are brought by the client. So it's not even an argument. And so he's like, doesn't matter who did it. So all of a sudden he says, doesn't matter who did it.
Now that he has to backpedal,
he keeps
and then continue to backpedal.
He backpedals, yeah. FINRA approved MMTLP to trade using outdated financial. So now he's back to that, then refused to stop it. Whoever's behind submitting. But like, here's the craziest part about them complaining that it's trading, or that it traded, because had it never traded, you wouldn't have this to complain about. You would have gone from a non-trading MMTLP share to a non-trading Nextbridge hydrocarbon share. You would have had none of this. So like, I don't even.
They're just mad because they bought it while it was trading.
Yeah. Well, yes, and they're mad because they didn't like the scheme didn't work, right? It didn't work, and they got.
Well, it worked for some people.
They made a bad decision.
like Berta and McCabe, who sold before the haul. It worked for them.
That's true. They did, and they did nothing. They could have stopped this. Berta says on that interview that he got in touch with George Palikaris and who was the council? What
And
was
the
council's
board.
name?
Ken Rice.
No, Ken Rice.
Oh, Ken Rice
And
was
Ken
there.
Rice told him, that's the one who told him not to talk about, like, you are not to talk about this. And then he said that I resigned right then and there, kind of thing.
Yeah.
Allegedly.
Right.
I mean, he resigned the day of the halt.
Right. So
Mystery.
anyway, they could have pushed it out a week. They could have stopped it, and they didn't. And that's the bottom line.
Yep.
Yeah, and then we had Rare DD. Is this again the stopping thing? And
Rarely correct, DD.
Yeah, and that's I
rarely is being a little too generous, I think.
Yeah.
Never.
and FINRA was the superseding authority. Period. I don't care what the brokers told you; they were wrong. Those people who answer the phones are like, they're not licensed professionals. They're not. I mean, sometimes you're just talking to an AI, as we saw happen this week. Like, I don't care. I don't care what they said when you asked a question, not really fully explaining the situation, because that is actually what happened. I guarantee you that the question that was asked it didn't put out all of this complicated S1 shit, right? They just said, this is what's happening. It's spinning off and blah, blah, blah. And they probably gave them just a boilerplate standard answer. But ultimately, it doesn't matter. It doesn't matter what any of your brokers told you. FINRA is the superseding authority, and they said, no, we're pulling a U3L, or we're doing U3L, because these brokers, everything is, crazy, and it's being canceled in 2 days, and we have to manually settle, and blah, 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 blah. Name it. Doesn't matter. FINRA made the decision, and they have the authority to make that decision, and they did.
Yeah.
Period.
Then, of course, we got the aftermath for Rob Carter and Isaiah getting clapbacks from the entire cult.
Well, that's what
that he
Busy
basically
called him.
put that in the profile just to fuck with her.
Well, no, that's what Busy called him.
Yeah, I know. That's why. Yeah.
Yeah.
Put the producer boy in there, which I look. If you can see over here, you can see mine. I said a step up from her, seeing as her job seems to be standing in the unemployment line with how much time she spends on here.
Yeah.
And
I think the interview was fine, right? Like like I said, I didn't know what questions he was going to ask me. I answered them to the best of my ability.
And they had more questions from the audience than they could handle, because like we showed earlier, like none of them cared for the Berta part of the interview, and they were just there watching hate gooning Amy, as they always do.
And Platt was in the chat, and she's like, "All right, does anybody care to refute what she's saying?" Like she asked like so many.
Yeah, I was
times.
begging. I was
nobody
literally begging. I'm like, please,
Amazing.
can somebody actually like
They were just
refute
talking
any
about
of these
Sifu
things
and
give
like
me
nothing.
a source for anything? Like literally, the only source they posted was like Doug Sifu in the NHL. I'm like, come on, that's not even what she's talking about.
Right. Mm-hmm.
Because all they have is ad hominem attacks against Amy.
Mhm.
Stepping to the next related topic.
Oh boy.
Oh, that litigation funding. Apparently,
Down.
that transparency that the MMTLP community so big about. Apparently, the one in charge of the litigation funding was not so big about that transparency in a bankruptcy trial. Whoopsies.
But
Whoopsies.
bankruptcy is the most transparent of all cases.
Yeah. So basically, now Wes Christian and his group of cronies are going to be basically retained on contingency, and then the litigation funding is gone, which makes it really hard for the estate to pay the money required for those discoveries, because remember, the cost for the discovery from FINRA, the burden's on them if it costs FINRA money. So how much of that discovery you think they're getting now that they don't have that litigation funding?
So the lawyers won't pay for it out of their contingency.
I mean, maybe
goodness of
could
their
pay
hearts.
for it out of contingency if they want to, but if they say no, I mean, do you
Yeah.
think Wes Christian is going to be paying FINRA hundreds of thousands of dollars? I don't.
I have no idea.
Maybe he will. Maybe. I mean, it's a possibility, but what we got here from Tony. NBH will raise the full 600 million or more.
Yeah, I've heard that.
Shareholders will see their accounts repriced.
I've heard that.
The cash and assets will generate massive cash flows. Right. NBH will pay shareholders.
Wow. That's new.
Yeah, a company that's bleeding like what is it? Like millions of dollars a quarter is going to just pay out a huge divvy for no fucking reason. Whose balance sheet is upside down by like what? What did we say? Like 20
like
million?
60.
Get out
No,
of here.
more than that. I think it's like 60
60 million. Sorry. Yeah.
Oh,
So,
it sounds like Tony was watching the William Ferrand live stream tonight because that's where that all came
Yeah,
from.
he sent me a link to that. He did. Let me see here. Do we want to check it out real quick, or do we want to just move on for now?
Not really.
Really.
Okay.
I think Tony just summarized it pretty nice.
We had Michael also chirp in since he's now the new face of the MMTLP
He's so
movement,
dumb.
even though he
Mhm.
never came in and completely grifted off the community and has not done a single.
Well, they all
fucking
know who
thing,
I'm
you
talking
know?
about when I said my friend. I'm talking about Phil, right? Like, in
Right. We all knew
it's not
who
a
it
secret.
was.
Phil doesn't
Yeah.
hide it. Phil, I mean, yeah.
Also,
But they think that I must mean Doug Seafield.
yeah. Also, speaking of friends of Michael, Houston Wade, we got an update in the Houston Wade case this week. He had his next omnibus hearing and they kicked it down the road again. So new omnibus will be the beginning of June, trial potentially at the end of June. But we got an update from his lawyers, according to the Landvik video, that they are currently negotiating with the district attorney. So I had assumed when he got an actual pay-for attorney, not like some public defender, that means he was going to take this all the way down because his ego was just not going to allow him to go to prison for being a kitty chaser.
Like, if this plea deal doesn't include some kind of prison sentence.
Oh, it absolutely will include him going
It
on the
has
list.
to,
That's for sure.
right? I mean, after the Instagram stuff and everything they found there, like I feel like there has to be jail time here. But I mean, I guess he's been in jail this whole time, right?
Right, which would mean he'd get time served. So
Well,
I don't
he
know
needs
how
more
long
time
they're
than
going to
that.
ask for. But
More time than months.
Because he has at least 2 victims and 1 sting that could have been a victim, but it was a cop on the other end instead.
Yeah,
So,
yeah, there's a pattern. Yeah, for sure.
So yeah, and like I don't know, but like I guess Platinum was right that he was going to eventually go to a plea deal. I guess he's definitely not made for prison because I didn't get to set in and watch it because it was during work. But apparently, the way Landvik described it, he was not looking so hot and had lost quite a bit of weight.
I imagine he's not getting hearty meals in there. That's for sure.
Yeah. Speaking of criminals related to the MMTLP space, so we had the court date for appearances. And what is this?
7 of them showed up and he did not
show. That's not good.
Yeah.
Doesn't that make him a fugitive from law?
On the run. Yep. That's what it is. Mm-hmm. But he's still like pumping penny stocks on Twitter. Like,
yeah, he's still just going strong.
100 flowers. Let's go.
Yeah, we went over that balance sheet the financials of that company last week. Not looking great.
All the rest of them showed up, though.
Yeah, which means that they're taking it seriously and Zach isn't. He's the one that has always like been the biggest.
They all got their own lawyers too. So
yeah, and he doesn't have any lawyers.
No, they all got they did.
They all got lawyers. He doesn't. He's the only one that doesn't.
Well, his lawyer was like, "Fuck this guy."
Well, yeah, if you're gonna be an asshole, then deuces. Then of course we had quarterly earnings for AMC. Still a loss. Wasn't horrible.
Not as much of a loss.
All things.
So not as much of a loss, but still
Yeah, not as
over
much of a
100
loss, but it
million
was still.
of losses.
Yeah, and isn't there supposed to be more dilution coming? Is my understanding.
There is, yeah.
Well,
Like the outstanding share count is going to be like 750 something million.
yikes! 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 Yikes!
Mhm.
Yikes! Speaking of our AMC Goonies that like chasing us around, you know how? Hey, Amy, you remember that time on B-Fly's space call where Ethan
Yes,
was
I
getting
do.
all loud and shouty about me only having 10 shares and all that stuff? What's that? Ethan only has 13 shares. What? This dude is something
Well, maybe
else.
wait, what was it?
Did he
100
sell them for a loss or what?
Well, hold
Oh,
on.
yeah.
Maybe they got
That's what he
split down.
says.
Maybe he had what was the last?
Well, he
split?
said he did
Was it
some
10?
selling during 2013 and 2023 and 2024. Sorry. So, sure, there's probably some selling in there, but he won't disclose how much. And now he only has 13 shares.
What does he always says he lost $95,000, right? Or something like that.
Oof.
Top ticker.
But I don't know that I don't know if that is the amount he put in or the amount that it went to when it was $72. I don't, that's not super clear.
Right. You know what we love? People in the meme stock community confusing the real crime with their make-believe crime. So I sat down and talked with both of you about the scenario that happened here with GDC, and all of you were immediately able to identify what the problem was with this stock. Oh, by the way, I didn't include in that description that I gave you guys that they had an open share offering too that happened right before this deal was announced, conveniently enough. So,
Because of course they
did. So where were all the criminals at, do you think, guys, in this pump and dump?
Pumping it. Hello.
Here, like all the way down to 13 cents. I love Tony's quote here. Nothing says someone is trading on information you don't have more than a stock falling from $8 to 13 cents in 2 days.
I mean, Ham's still trying to pump this. He's trying to say that it has to be at least $10.25 or 75 cents, whatever it is, like, or more. So he's basically like trying to get people. I mean, it literally was like a mean shit coin rug pull. Like, look, that happened in one candle. What are we? Wait, what are you on here? The daily?
Yeah, I'm pretty sure he's got there's the daily.
Awful.
That's a bad daily.
It's a bad daily candle. But yeah, so I think he's tweeting out today about how.
Oh yeah, I was clapping at a couple of those tweets. Absolutely, he was still pumping the shit.
It's a lie. Don't buy it.
And then we've got
oh my god.
Yeah, like no, we're getting there.
Oh my god, I have a stupid tweet of the week.
Oh my goodness.
Look,
we had a bunch of.
Wait. Tony Bernard said GDC increased their shares authorized from 200 million to 10 billion, then issued a $300 million ATM. But the problem is shorts. Yeah, right.
The short seller is the company.
But what about the buyout offering? That was
the call is coming from inside the house. But yeah, no, this was part of their whole thing that like, oh, hey guys, because Michael Burry said that he would leave.
That's stupider than my stupid tweet. Jesus.
because Michael Burry sold out of GME after the eBay deal, it means that they're buying
the more you
He
read.
knows that Ryan Cohen plans on paying for eBay acquisition with BBBYQ money, and he is conflicted out.
And it gets stupider after that, though.
What? He knows the whole market's going to dip as Iran attacks the U.S. Navy escorting ships through the Strait of Hormuz tomorrow. If this is the case, I'm sure he will buy back in after the dip. Even if GME only dips to 22 with a position his size, it wouldn't make sense to hold through.
And then the market went to all-time highs.
What?
Yep.
Are you talking about?
Nobody knows what he's talking about.
Okay, so this is going to be a little tricky because I know some of Nick's people are still in on Nick's channel watching. So normally I would say if you're on the YouTube side, then you can just do the poll. Except there's
I
some
don't
people
even
that won't
have-
be able to do the poll from the YouTube side. So here's
I don't
how this
even have
works.
a stupid tweet of the week, so I'll be a voice.
Well, I have a guest stupid tweet of the week person, so that's good. We'll still have 3. So if you're new from Nick's channel and don't understand how this works, we have some stupid stock tweets from meme stock people, or just the general market in general. The most idiotic tweets that we've seen for the week. We each pick one, and you vote on what's the stupid tweet of the week. If you're on my YouTube channel, you can vote directly in the poll. If you're not, please dispense into the chat which one you think is the stupid tweet of the week, and we will work from there. This guy, is this the guy with the fictional? So we have
Yes.
Platinum. You have one, right?
Yeah, hold on.
And then we have me, and then we have our guest. It'll be interesting if our guest wins. But do you have yours ready, Platinum, or
Who's
should I?
our
roll?
Not
guest?
yet.
What does
You
that
go first.
mean? You're taking
So
guest
I will
submissions?
roll with our guest one. Our guest comes from AMC Scams,
Okay.
and it's Spence.
Perfect.
If the eBay executives were smart, they would welcome Cohn as CEO with open arms. Why wouldn't they want to make eBay more profitable and in so gaining bonuses and RSUs? One reason: fraud.
Oh,
I don't know.
They can't have someone come from the outside and look at their books. The eBay shareholders could be drooling at the opportunity to have Cohn as CEO and increase their share value.
I bet they're not.
Cool story, bro. Let's see here. You know, man, I've got 2 options here. Should I do a Bed Bath one or a GameStop one?
Let me go
which one?
first because
Okay,
mine's
you
both.
go first. Okay,
Okay. Can you see this?
let me pull it up.
So this is actually from Reddit, but the comment was just so great. Nah, you don't get it. GME bought a bunch of BBBYQ shares and bonds when they were in bankruptcy. So when the shell reemerges after the waterfall, GameStop will receive a huge amount of money, and that's the money they will use to fund the eBay purchase. So there won't be any debt or dilution.
Okay. So if man,
You know
this
that's
is just
stupid.
too good. No. We'll. Okay, so you already got the BBBY one. We got an
And
AMC
GameStop.
baggie. I'm going to go with the GameStop one. Bad math time, folks. Bad
Oh,
math
dear.
time. This is actually a
Oh, God,
screenshot.
not him.
I'll
Oh,
tell you
boy, I think
now
Quarks
why
is
this
gonna
super
win.
Bad math, because
Quarks is
I've
gonna
got
win.
an actual calculator that actually calculates. It's in the show notes down there and in the description. That actually calculates all of the possible factors that go into the future price. But like, what here is Marantz working with? Because this looks really bad. So
Oh, boy.
like, so I assume this down here is supposed to be the number of shares eBay will get in the 50% stock. Like, he's saying that 4 shares is an LOL situation. My dude, bro, they're like, at current prices, they have to create 1.1 billion new shares. What do you mean only 4 shares per investor? Like, this math here is making your math look really clownish, my dude. And he's saying that the new share price will be somewhere between $60 and $43 a share. Get the fuck out of here. What?
Is that the what? Okay, I don't know what is happening here.
So, like, this is the share cost of the notes, the warrants, and everything in Cohen's tranches, which, I mean, like, you would put that on the back end because that's all stuff that would happen.
Hold on, the
after
RC stake
transaction.
percent. Didn't Ryan say that his stake would end up being 9%? Isn't that what he said in his letter?
It depends on the amount of dilution, but I assume that what he was thinking is this one, yeah. But it also depends on, what, because the price, like the equity needed, and is a function of the market cap and how many shares you need to dilute. So the higher GameStop's price goes, the less shares they're going to need to issue to, consummate this deal. But like, he's like, what is it here that he's trying to suggest? It is like, he's saying it's going to be like, oh shit, I didn't mean to stop sharing. Give me that back. So he's saying that at most they'll only have to dilute, what is that? Like roughly 888 million shares, which is no, like just no. Again, there's your actual math. Like what no, like what are we talking about here, dude, bro? It's not even.
Does he explain how he got to his math?
Maybe in the video he does, but that screen cap sure is not helping his cause that he got anywhere near. All righty. So voice votes, we'll give some time for those to filter in. I have a feeling.
I'm going to give it to Morant. I'm going to give it to Noisy tonight.
Oh, good. I'll take that vote. I need it.
Well, that's just stupid math, like straight up stupid.
Yeah.
I mean, they're
verifiably incorrect on multiple levels.
I guess that kind of math is more shocking to me than someone at BBYQ thinking that they are going to fund the purchase of.
Well, this was my original one that I was going to go with.
Oh boy.
I probably should have gone with that. I would have won if I picked this one, I bet.
Oh, this guy. Oof. This guy's like the MIT guy, right? Oof.
Yes.
Yeah.
51% to legacy BBYQ.
Just imagine you're an MIT guy who got a legit degree, and this is what meme stocks does to your brain.
I mean, look what he's saying. 51% to legacy BBYQ required, 19.4% to GameStop, 40% of the remaining 49%, 29.4% eBay, 60% of the remainder. What? I mean,
what does that even? What?
Like, how do you just
because
yourself?
what he's saying
How do you
is
just
that,
insert your bankrupt, gone, extinguished, canceled stocks into a
this.
GameStop merger
and then relinquish
acquisition
GameStop as a minority owner along with eBay?
Yeah, and then
while
make
your
GameStop
bankrupt company with no assets and nothing,
and you have
gets half of
51%.
Because they have
51%.
Don't you see required in parentheses? That's why.
What are we talking about?
It's required for
What
the NOLs.
What kind of insanity is this?
That's
like,
what they're trying to talk about.
How do you even get here?
Yeah.
This
You're
probably
quite
should have been your
wrong.
stupid tweet of the week because this would have won.
Yeah.
That would have,
This is worse
because
than
Amy
mine.
ended up winning.
There's really no other clean way to interpret that kind of language. Yes, there is. Yes, there is.
It's called reality.
Like any other
it has
way.
absolutely nothing to do with BBYQ.
Yeah. Platinum ended up winning again. She's like the master of this at this point.
I tried.
We need to step
tried
up
to
our
give it to
game,
you.
Amy.
Sorry, I tried to give it to you.
I cross-platformed this week.
She really researched her stupid tweet.
I was
of
in the
week.
Teddy sub, like, what's going on in here?
Hey, fellow kids.
I detect some stupid seriously going on here.
What's happening in this joint?
All righty. Well, it's
All
been
right,
fun
friends.
hanging out with you. I'm sure we'll have some more fun stuff coming up this week. Hopefully next week we'll just keep the theme going because, eBay's board will give us an answer to Ryan Cohen and we'll have a whole new list of silly things to talk about, I bet.
Well, yeah, these people aren't getting smarter, that's for sure.
Aw.
But
It's not my
till
fault. I didn't
next
do it.
time, I
Until
will
next
catch you
time.
folks all around. We'll see
Happy
you
Mother's
next
Day
time.
to all the mothers.
Yes, Happy
Yes.
Mother's Day.
Happy Mother's Day. Bye.